Good morning to all. You can hear?
Good morning.
Yeah, very good morning. I am sharp on the dot on time. So now its time is 8:30. So I strictly believe in punctuality. So that's why I am very particular in starting the session sharp at 8:30. You all can see my image, you know? My image is visible, no?
Yes, sir.
Right.
Yes, sir.
Okay, Meena. Thank you. So now today's session will be the final session. Now we have conducted 3 sessions in the past. 18th of October we started. Then we had the follow-up session on the 22nd of November. Then again on the 29th of November. Now today the 6th of December. Today will be the final session, and today's session is also an important session. So in this session, we are going to cover, I will just take you all back to the previous session just to refresh your own memory. And in addition to that, there will be a presentation, there will be a session on letters of bank guarantee, because this is also another important area in banking. Banks make millions as profit on this particular area, but bankers should understand the operational aspects and the mitigating techniques in issuing bank guarantees. Because since I think from this year, we have incorporated bank guarantees also into our syllabus. So there will be questions on bank guarantee. Then after completion of that session, I will also touch on past papers, because I have selected 3 past papers which have been uploaded in the system. You have the past papers in the system. You know, later on you can visit that, but I will also explain the past papers one by one, how you should answer the past papers. In addition to that, today's session, the handouts of today's sessions also we have incorporated, we have uploaded in the system. So you have you won't have any problem, you have no worry, because you can always revisit the site. So today's session is very, very important, because you know, even the questions for this particular session will be set by me. So I'm not going to, as I told you all in my previous session, I will not be going out of this session. All questions will be selected and set from the handouts and from the presentations what I have made. So before I proceed, is there any questions which you all want to ask? Is there any questions? You all are there, no? You all are there?
No, sir.
Yes, right, fine. So now I must also tell you all that I'm very, very grateful to the people who have asked questions, because a lot of people ask questions. I'm very happy about it, because that motivates us. And I think this particular audience, this particular group has been very, very active, and they have been interacting. I could see a lot of people ask questions. And, you know, whatever questions you ask, it will be respected. I will not be humiliating anyone. I will not be asking any question direct from a particular person, because I know there are about 245 people watching this program. So I will not ask, I will not mention any names, although I have the facility of, I could see their names, but I will not mention any names to embarrass anyone. So you are free to ask any question, because whatever questions you have, you can ask, because you will not be you know, the questions will be respected, because when you ask questions, it helps us, the lecturer. Then, you know, there are certain things we also as lecturers still we are learning. Even in this session, there were certain things which we didn't think about it. Some of the students came out. It was very nice. It was very nice, because we are also getting tremendous satisfaction in conducting these programs, in imparting our knowledge. So now this is a new experience for us. This COVID-19, it has been a new experience, not only for us, for everyone. It has affected every sector is affected. That's what I was telling you all. The world has come to an halt. Now we as lecturers, we are also affected because I had a whole heap of programs scheduled for this year. All those programs have been cancelled because they are unable to conduct the programs. So we get tremendous satisfaction in imparting our knowledge. Now I have shared my experience. That's the reason why I have narrated a lot of stories for you also, because when you narrate a story, that will always remain with you all. So now what I am trying to do today is, I am going to briefly, I'm not going to go deep into the matter because the slides are there. You can always revisit the site. I have also revisited the site to see whether, just to see what are the gray area, what are the questions you all have asked and all those things. I have also revisited the site just for my satisfaction. So I thought I should, for the betterment, for the benefit of the students, I will just briefly go through the previous sessions. I have summarized it. I'm not going to go deep into the matter. I'm just going to refresh your memory. That's the idea. I'm going to refresh your memory. Now, different types of securities generally accepted by banks. Now, as I told you, this is your menu card. So the questions will be from this, in this particular program, exam. Now you are assured of 20 marks if you answer the security, what you call securities for bank lending paper. You are assured of 20 marks. Even in the previous session, there were some students who got the full marks, 20,000 rupees. We have even commended them, saying that excellent. I have even used the word excellent because some of the students, they got a proper understanding. They got a proper understanding. They get a proper understanding, they get the full marks. So if you are getting 20 marks from this for this session, just imagine that will take you through to the diploma, because you may have to score some marks from the other areas also, but here you are assured of 20 marks if you answer the questions properly. So I don't think you will have any problem in answering, because it will be a very, very easy paper, provided you go through the handouts very carefully and listen to the stories which I have narrated. Now, different types of securities generally accepted by banks. Immovable property, I have explained to you all. And if I take your memory back on immovable property also, there's an element of risk. Why I say that, I explained to you all how an immovable property, where the customer, is here, he has allowed the dialogue to install a tower there, and the full value is on the building, because it's the land value was, I think, limited to a small area. So the bank has to rely on the building. So in case if something happens to the building, if the building is damaged, how do we mitigate? So I explained to you all. So you may come across such situation. Then another property I explained to you all about immovable property in Kandy, where I was telling you all to go through that image very carefully, and I'm happy one of the participants gave the answer also. I'm very happy one of the participants gave the answer, because if you go through the image very carefully, because the value also to deviate, to divert your attention, they may not comment on some of the gray areas. This is a fact we must accept it, although they are bank valuers, sometimes they also miss. So now, because that particular aspect, that particular risk was visible because the image was there. So we had a closer look, and even some of the relationship managers have missed it. So when it came to me, I checked it. So here, in that particular property, pointless taking such a property as security, because in case if we want to go for parate action, we can't sell it. Why? Because there are tenants occupying. There are tenants occupying the building. I don't say if there are tenants, you can't take. We can take it, but we'll have to find out the legal status of the tenant. So you may be wondering, well, in that case, we can't take houses which have been given on rent. No, you can take it, but provided we have to ascertain the legal status. Now, in this case, that house was in a very, very bad state. But there was a family which was residing. They have been residing for the last so many years, risking their lives. But the landlord also was not in a position to eject them. So if you come across immovable property valuation, tenancy, the status of the tenant is very, very important. Valuer has to comment who is occupying the house. There's a family occupying. Then we like to, as bankers, we like to ask the family, we have a right to ask the family how long you have been occupying, what is the rent you are paying, whether there is a legally executed lease agreement. If there is a legally executed lease agreement, then there is no problem. As bankers, we need not worry. Only precaution we do is, we execute a deed of postponement. We execute a deed of postponement. If an immobile property, if you are taking as immobile property as security, one of the customer, he has given the house on rent, he is coming to the bank, valuer say there's a family occupying, so you have a right to ask from the tenant, from the landlord, who are the tenants, what is their legal status. Then he will say, no, I have executed a lease agreement. If they have executed lease agreement, you have no problem, because you know that they will, they will vacate. But there are, even with lease agreement, there are people who may not vacate. We have come across several instances. That's the reason why people are not giving houses on rent, because they keep it closed, because they know, although there's a lease agreement, to eject them, you may have to go to courts. After the expiry, they may not vacate the house. So even if there's a lease agreement, what we do, we take a precaution called deed of postponement. Deed of postponement. Listen to this very carefully. Deed of postponement. So when you say deed of postponement, means the tenant executes a deed and he confirms to the bank, in case of an eventuality, the bank's mortgage will have priority over his tenancy, over his lease agreement. That means if a customer, if the landlord defaults the loan, we can go for priority action, because the tenant has to vacate in the sense he has given a deed of, that means he has told that you have the priority. That is what is called deed of postponement. So immovable property, there's a question, what are the important aspects you have to ascertain in immovable property? Immovable property, we have to find out, apart from various other things, occupancy is very important. Otherwise, what will happen is you will be burdened with a property which has been given as security with a tenant. And that can be property where the old building, there was a family which was occupying. There's a family which is occupying, but they will never vacate the house. But they have been living at the risk of their own lives. They have been living with this particular, all this exposable risk. The building might collapse any moment, but they are not bothered because they have been living. But the tenant, the landlord also cannot eject them unless he goes to the courts. So this aspect, you have to be very, very careful when you are taking immovable property as security. Immovable machinery also, I have explained what is immovable machinery. If there is a question on immovable machinery, how do you ascertain whether this particular machinery is movable or immovable? Can you give me the answer? I have explained. How do you ascertain? You go on inspection to ascertain whether this particular machinery is movable or immovable, whether this machinery could be removed, moved, or it's immovable. How do you ascertain? What is the criteria bankers use? What's the criteria bankers use? I explained to you all. When you are taking immovable machinery, how do you ascertain whether this particular machinery is movable or immovable?
Yes, sir. It can fix in with the ground or
on a concrete layer. On a concrete layer. Yes, very good. If the machinery is fixed on a concrete layer, it is a immovable machinery. If the machinery could be removed without breaking the flow, it is a movable machinery. So the criteria, the answer is, if the machinery is fixed on a concrete layer, it is an immovable machinery. And if it is an immovable machinery, you can't take a mortgage over the machinery alone, because that is part of the building. Then you will have to take a mortgage over the entire property. Am I correct? I explained to you all, because there may be a question on that. So immovable machinery means, if you come across immovable machinery, How do you ascertain the immovable machinery? Because if it is fixed on a concrete layer, to remove the machinery, you have to break the flow. It is a immovable machinery. It's a immovable machinery. But on the contrary, if the machinery could be removed without harming the flow or without damaging the flow, slowly you can remove. It's a movable machinery. So in case if it's a immovable machinery, you can't take a mortgage over the immovable machinery. Remember, you can't take a mortgage over the immovable machinery without taking a mortgage over the entire property. Is it clear? Is it clear? Is it clear?
Yes.
Yes. Now coming to movable asset. I don't want to go deep into the matter. I have explained to you all movable asset. I just showed you all this Majestic City, where it's a movable asset. So most of the shoppers have vacated. So if you have mortgaged, if you are taking a mortgage over some of the stocks, your security is very, very weak, or you have no security now. You have no security because all the shop people are having problem now. See, take for instance apparel industry, textiles. I think that is the most vulnerable industry which has got affected due to the COVID-19. Why is that? Because people are not willing to invest on textiles at the moment, because most of the people are working from home. So there is no necessity for them to go and buy, garments or shirt or whatever it is, because they are working from home. And I was listening to one of the seminars where some of the apparel people were telling, they are greatly affected. Because why? Because of the working from home concept. There is no necessity for people to purchase textiles, shirts, garments. Ladies will not purchase garments because there are no necessity. So they are affected. Now it has come to a stage now. Recently, I got a call from one of the leading outlets. I don't want to mention the name. On my birthday, they gave me a call. I was wondering, because they have the data, because we used to go and buy from them. When I was working, I used to buy. So they gave a call and they wished, "Sir, many happy returns of the day. We are calling from this place. Wish you a very happy birthday." And then he told me, that person, "Sir, because of your birthday, we are giving you 20% discount. 20% discount. You can go to any of our outlets, and this is valid only for three days. Within 3 days, you can go to visit any of our outlets, and you can purchase. You can mention your name. They will give you 20% discount." But I didn't bother to go because I have not gone out because of lockdown. Now, a couple of days back, I got another message from Fashion Bug. Fashion Bug has sent a message. "Select your this thing, they will deliver it. Just come to such as, just imagine, they are asking you to select and they will deliver it." So you could see, why are they doing? Because they are greatly affected because of the COVID-19. Now see this, today we are 6th of December. December is a very active month with lot of enthusiasm, with lot of positiveness, and people get the bonus. And this December is a month where they make lot of profit, lot of sales. So they are greatly affected. So movable asset, you have to be cautious. You have to be cautious because overnight the assets may become zero overnight. The Majestic City, I quoted that, I showed that as an example, because all these stories and clips I have shown you all, so that it will always remain with you all. It will always remain with you all. Now, if you are a banker and you have a large amount of portfolio which is covered against movable asset, you will be worried. You'll be worried to see where are these movable assets. Now that doesn't mean that you can go and remove the stocks. You have no right to do that. But you have to monitor. You have to ask the customer, what has happened to the stocks? You have vacated your stores. Then he said, "No, I have shifted everything to my residence." So you may have to carry out inspection. So that is very important when you say movable asset, because there will be questions on that. Motor vehicles, I have explained to you all. Stocks in trade also comes under movable. When you say movable assets, stocks in trade also comes under that. I have just showed it separately. stocks in trade also movable. So remember, when you say movable asset, any item which could be physically removed are considered as movable asset. So motor vehicles also movable. But motor vehicle, there is a different precaution we are taking, unlike other movable. Then guarantee. I told you all, guarantee also, it's a high security. It's a weak security. Guarantee is a very weak security because I have in my banking exposure, I had never come across a situation where the customer who has defaulted, we write to the guarantor demanding payment, he comes and pays. No, it has never happened. It has never happened. Then corporate guarantee is a guarantee given by a limited liability company. Limited liability company. So if a limited liability company comes forward to give a guarantee for a particular individual, that guarantee should be supported by a board resolution where the directors, where the company should have resolved to give a guarantee. So how do we know? Two directors can't just come and say, no, we want to sign as a guarantor. No, that should be supported by a board resolution. Then life insurance policy, I explained to you all the situation, the circumstances under which we are taking life insurance policies. Then cash security, I have explained to you all. I explained to you all what are the risks involved in cash security. What are the risks involved in cash security? I explained to you all because cash security also, there's a major risk because major frauds have occurred in some of the leading banks on this particular security. How did this occur? If the people who signed as witnesses have been cautious, we could have prevented this particular fraud. So you have to be very careful in wherever you are working, in your bank or finance company or wherever you are working. If there are instances where a customer wants to take a facility against cash, you have to be very cautious, you have to be very careful whether the particular deposit holder has signed. Husband and wife, you have to be very, very careful. I'm not telling that, that doesn't mean that when you should not grant it. You have to be very careful, husband and wife, because husband without the wife's knowledge may come and borrow. So we don't know whether they have any internal problems. So you have to be very, very cautious because this type of situations you may come across where the customer may come and say, my wife is unable to come. Can you give the letter of? I will go and get it signed by her. You should never ever give. In such a situation, you may have to go to the customer's residence and ensure that it is signed in your presence. So it is your responsibility. Remember, when you are signing as witness, it is your responsibility to ensure that that particular person has placed his or her signature. Then marketable shares, I explained to you all what are the important follow-up you have to comply when you are taking marketable shares, because that is all very important. Security, marketable shares. When you say marketable shares, the word
මේක ඕෆ් කරලාම ගන්න ඕනේ තායි ස්ක්‍රීන් එක
marketable shares, you have to monitor the fluctuation of the shares. You have to monitor the fluctuation of the shares. That is very important when you are taking marketable shares. If there is a question, when you are taking marketable shares, what is the follow-up action we have to take on marketable shares? There may be a question. You have to say we have to monitor the fluctuation of the shares. Then coming to the next one, demand promissory note. I have not explained what's the demand promissory note. What is demand promissory note? When you say demand promissory note, now these are the securities. The questions will be from this particular area. So you have to listen to it very carefully, go through it very carefully. I don't think you will have any problem because everything has been explained. Now the last one is demand promissory note. What do you mean by demand promissory note? I have just put that here. This is what is called a demand promissory note. This is what is called a demand promissory note. We take demand promissory note. It's a clean security. When you say there are instances where banks grant facilities without any security. If somebody asks what is security, sometimes in banking terminology we say clean. If they ask what is the security for this facility, we say clean. That means no security. We are not taking any security. So in such instances, if we don't take any security, sometimes we take a document called demand promissory note. So this is the simple document we take where the customer, where I think there are some disturbances, better you can avoid it because there are about 245 people watching this. This demand promissory note, this is what is called demand promissory note. Demand, it's a simple security. Nothing is involved. We just get the customer to sign a document called. We take a document.
Sir, admin off करना पड़ा अंदर sir.
Right. So this is what is called demand promissory note. It's a simple document. There is nothing, no asset involved. Just if a customer comes and asks for a facility, 100,000 without any security, and if you have absolute confidence in the customer, you may sometimes waive off securities. I don't want any security, so you can just take a simple document called demand promissory note. Only thing is that has to be stamped. So where the customer promises that he will repay the facility. This is what is called demand promissory note. Then I have, as I told you all, I also went through this presentation just to see the question what you all asked and whether we have missed any point. So last week there was a question.
Excuse, yeah, it's a question. Is it like when you are sometimes granting a facility against GTC? Against general terms and conditions on the trust of the customer? Is it also similar to the demand promissory note? Or
when you are giving facilities against
general terms and conditions, GTC.
General terms and conditions, that means you are not taking any security.
Yes. Considering their past records and the trust on them.
Yes. If you're not taking any security, you can always, if there's nothing for you to, because you may even, you are issuing a letter of offer, no? You are issuing a letter of offer.
Oh, offer, only the offer and the GTC.
Yes, you are issuing a letter of offer, but as an additional precaution, to strengthen your exposure, you can take a demand promissory note. To strengthen your exposure, it is always better if you take a demand promissory note, because because these are clean facilities, you have the letter of acceptance, but in addition to that, you can take a demand promissory note that will strengthen your case, that will strengthen your exposure. Only thing is you have to ensure that appropriate stamp duty is paid on that particular document, and it has to be witnessed by 2 people. So in case if the customer defaults, you are on a strong wicket, you have the letter of acceptance. In addition to that, you have a demand promissory note. But demand promissory note, we don't take it from first class customers. Am I correct, Miss?
Yes, sir.
Yeah, we don't take it from first class customers who are, on whom you have the absolute confidence. We may not take. Yeah. So under normal circumstances, this is also an additional precaution. Yeah. So now this particular, I have explained everything. I don't have to go through it again. Listen to this. You can visit this again. Go through this handout, everything. So now this just to deviate from that, this thing, last week I told you all this gentleman, Mr. Suresh from the IBSL bookshop. You were able to speak to him. He has changed his number about the book. Make a note of it.
I was able to talk to him.
Right.
Thank you very much for the time.
He said he will send it, no? He will send it.
Yes, sir.
Yes.
Yes, sir. Thanks for the arrangement.
He has changed the number, his number for the benefit of the others. His number is 076. 076. Make a note of the number. 076 00 69 160. 076 00 69 160. This is the IBSL bookshop officer in charge, his number. So I have spoken to him. So you all have also, some of you all have spoken to him. So if you want the book, you can speak to him. He will arrange to mail it to you all. So now I am, before going to guarantees, because I am going to touch on the insurance again, because this is also a very important area, because last week we were just rushing through. So I thought I must say again revisit this particular these slides. Major risk, apart from our documentation, the bank is not only exposed to greater risk due to the carelessness in the execution of documentation and its management, it also faces a major risk in realization due to an eventuality beyond its control. This could arise unexpectedly and could take us by surprise without any prior warning, notice, due to the natural and man-made calamities. To overcome this risk, the bank depends on insurance, and I have explained to you all in detail last week, and I have narrated my own experience where we came across a situation where the bank lost 1 billion worth of stocks were damaged, and we have renewed the insurance just 3 or 4 days before the calamity. We have renewed the insurance. How the managing director of the bank, he was concerned, he sent messages, all those things. So we never expected. And then I also given another example of how another difficult customer, he has mortgaged his house at Colombo 7, and he was arguing with us. These are 2 stories, which I have shared in my book also, because he was arguing with me, and he said he has argued with one of my staff member, and he has told not to renew the policy, and he has told that you are mad, your boss is also mad, I am staying in Colombo 7, terrorists are not going to attack my house, I am staying in Colombo 7. What happened? JOC, Joint Operations Command headquarters was attacked at Flower Road. Some of the houses in the vicinity were damaged, including this customer's house completely gone. So we were able to realize the full exposure, why we had the insurance. So now, importance of insurance. Now, you have to remember, when you are answering the questions, don't forget to omit insurance. Now, I know last time or previous, one of the previous exam, there some student has done very well. The student, I felt sorry also. The student has done very, but unfortunately, he or she has missed the insurance. Nicely they have explained. He or she has explained, but forgotten to touch on the insurance. Insurance is very important. Insurance, now see, a couple of days back or 3 days back, the weather warning. The media said there was they were expecting a major calamity. And in the northern province, in the Jaffna and the eastern province, a lot of houses have been damaged, I think mainly in the northern province. So when the weather warning was given over the news media, as a banker, you should have been concerned. Because the moment you heard that weather warning, if you are gone to the insurer and ask the insurer to give a cover against cyclone, insurer will not give. Why? Because of the weather warning. We came across such a situation many years ago, in 1995, I think, if I remember correctly. There was a major flood in Colombo. Half of Colombo went underwater. These are true stories. Then the Met Department gave another warning and said they are expecting another major flood with cyclonic storms within the next 48 hours. Then what happened? We got special instructions from our managing director, who gave instructions to all the branches, to everyone, asking us to re-examine our insurance policy and to see whether we have the, what you call, natural calamity, natural disaster, cyclone cover, all those things are there. So he gave us the order, wherever there is this clause, this cover is not available, you are hereby requested to obtain the cover. Then we had to work late. Most of us worked till 10:30, 11 o'clock, took all the files. We were going through our files to see the customers who didn't have this cover. Some customers didn't have the cover. Then immediately, following day, we contacted the insurer. Insurer declined. When we asked the insurer, these are the customers, we want to get some of them don't have the insurance, this natural disaster cover and cyclonic storm cover, all those things. The insurer said, no, we have the issuance of natural disaster cover have been suspended. Insurer said, have been suspended until further notice. So when we asked the insurer why you all have suspended, they said because of the weather warning. Because of the weather warning. So just imagine. So we couldn't get the cover. So insurer. So when you hear something, if you run to the insurer will not give you the cover. Insurer will give you the cover only if that particular risk is not visible, not on site. So as a bank manager, you have to be ready to face. Now, see, last week when we heard the TV, this warning, we were also worried. The entire country was worried. That was the news, the media, it dominated the news. It dominated the news, and a lot of people I saw on TV yesterday, a lot of people have lost their houses. So you have to remember this calamity, natural calamity, man-made calamity, it is beyond your control. That's the reason why we are depending on insurance to a great extent. Now see 2004 tsunami. 2004 tsunami, most of you all will remember, on the 26th of December, the day after the Christmas, only this happened. And I also didn't know about it. When I heard one of the MD, CEO of a particular bank, I'm not going to mention the name of this MD, CEO, he only gave me a call. He gave me a call and told me, I heard about this and tsunami, we have never heard the word tsunami. He said, what 4 or 5 people have been killed, the sea is overflowing. And he said, is it true? He asked me. So I said, I have not heard anything like that. I have not heard anything like that. Then he just told me, I just heard from some source there is. Then I was wondering how to find out. Those days we didn't have this SMS, news alert and all, SMS. Then what I did was, I used my common sense. I selected a hotel which is in close proximity to one of the seas. I just gave a call. It was Sunday. It happened to be a Sunday. I just gave a call to the hotel and I asked the hotel people whether you all have Sunday buffet today. I just asked because I just want to see whether they will give a positive answer. I just gave a call. I selected this particular hotel which is closer to the sea. And I asked whether you have the Sunday buffet today. Immediately that girl who answered said, so sir, there's no buffet, all buffet cancelled because the sea is overflowing. So we are all binding up, the sea is very frightening. So immediately it was confirmed. I knew this is going to be a major calamity. But you could see about 45 to 50,000 people died. Even in our bank, HNB also, we lost one of our senior manager, a lady. Couple, she went with her husband to Yala. And, they went with a group. Unfortunately, this particular couple, they delayed their departure because they want to have their breakfast and leave, and they got caught to the tsunami. And this girl's body was recovered, husband's body was not recovered. So why I am saying that is, with all this calamity, not a single bank crashed. Bankers had to totally depend on the insurance. Billions of worth of properties have been damaged. So you have to be very careful. If you are a credit officer, if you are a branch manager, your insurance portfolio, it should come under your purview. I am telling you all, if you are a credit officer, if you are a branch manager, the insurance portfolio, as I told you, how that insurance portfolio came directly under my purview, it has to come under your purview. And you have to ensure that insurance is always in force. Natural calamity, man-made calamity, it could happen anytime without any warning. So this is very important for you all to remember. Then insurance is an umbrella which a banker should possess. I am revisiting this slide in these particular slides because I have gone through the slides. I thought I have not explained, I have not gone deep into the matter because of the time factor. That's the reason why I am visiting this again. So this umbrella cannot be purchased during rainy days. It could be purchased only when there is sunshine. It is absolutely essential on every asset on which the bank has an interest is adequately insured in the joint names of the bank and the borrower. Bank has a legal interest if the asset is mortgaged. All bankers should remember that fire, destruction in various forms could arise and anywhere, anytime, without any warning or advance notice. Hence, we have to be ready at all times to face this eventually. Now, see, insurance is like an umbrella. I can give you another personal experience in the sense, personal experience which I have encountered in the sense which I used to adhere. Wherever I worked, I always used to have a small umbrella in my drawer. In my drawer, I used to have a small umbrella. I have forgotten about it. It is there. There are times after work when we come out of the building, we see a lot of heavy rain. We can't even go to our car park. Most of the staff members wait because they are unable to get out. I go back to my seat, open the drawer, take the umbrella, and happily I get into the car and go. Whereas others have to wait for 1 hour, 2 hours, sometimes 3 hours they have to wait because they didn't have an umbrella. I used to always tell them because a small umbrella will cost only 150 or 200 rupees. But still for all, I have purchased an umbrella. It was there in my drawer. I always, as a habit, I used to have this umbrella. When we come back, they used to ask, boss, you are going? I said, yes, I have the umbrella. Whereas all the others wait. So insurance is also something like that. It's an umbrella which will protect you, which gives you protection. Then it is absolutely essential on every asset on which the bank has an interest is adequately insured in the joint names of the bank. Now, when you are taking an insurance, you have to ensure that it is assigned in your favor. The reason why we are insisting on the assignment is, if it is not assigned, the customer can lodge the claim and get the claim direct. The particular difficult customer at HNB, I told you all, it's the difficult customer. He had to come running to the bank. Why? Because it was assigned in our favor. That's why we call it joint names of the bank. That means the policy was assigned in our favor. He can't go direct to the insurer and claim. Insurer will say, no, we can't pay. Why? Get a approval from your bank because policy is assigned in our favor. Policy is assigned in our favor. And going deep into the matter, if the policy is assigned in our favor, even if the customer has not renewed the policy, he could sue the bank. Why? If he has not renewed it. Because if it is assigned in our favor, we have an insurable right. Now, that particular difficult customer, supposing we have listened to his plea and not renewed the policy, and when the house was destroyed, he would have sued the bank. Why? He would have gone to a lawyer. Lawyer would have said, no, even though you are not renewed, bank should have renewed. Why? Because it's assigned in our favor. So he would have sued the bank and gone to courts to say that it was assigned in favor of the bank. So if the bank has an insurable right, we can't go and tell the court, no, he told us not to renew it. No. So you have an insurable right. So remember, just because the customer has not renewed, you can't escape. If it is assigned in your favor, you have an insurable right. Insurable right. Now, even that Korean customer, 1 billion loss. Later, we were told by our bank lawyers that in case if you all are not renewed, you all would have been asked to pay another 1 billion because The policy was assigned in your favor, so you have an insurable right. We have lost our assets. At the same time, customer also can sue the bank. Bank has a legal interest if the asset is mortgaged. All bankers, you remember that fire, destruction in various forms could arise anywhere, anytime without any warning or advance notice. Hence, we have to be ready at all times to face this event. I know in most of the banks, people don't give serious consideration to this particular aspect. Now, I used to go to various banks to conduct training programs. And, when I conduct training programs, the people who participate, they are a branch manager, they are a credit officer. I immediately, I asked them, you are from which branch? They say, we are from this branch, that branch. So I used to ask them because these programs are conducted exclusively for this particular branch, the bank. I used to ask them, can you all just confirm to me that all the policies in your bank are in force? And most of them, 99% of the people were mum. They don't want to confirm. They look down. I said, no, I am asking you all, can you all confirm? Then when I used to point at some people, they used to say, no, sir, I can't confirm. I'll have to check. So just imagine, now even that particular MD CEO who came for my session, he was occupying the last row. After the program, as I told you, he came to me. It's a true story. And told me, Mr. Rajanan, I listened to your story. It made me also to think. He said, I am also worried about my bank. I am also, these stories what you narrate are very, very good. And it made me also to think, and good that I came for this session. Now, tomorrow I am going to send a special circular to all my branch managers, credit relationship managers. I am going to ask them to confirm whether all the policies are in force. So insurance is one area you cannot relax. During my time, wherever I worked, I was very strict with insurance. There are some of the relationship managers used to come and sit in front of me and beg from me, sir, can you release a loan? Insurance, tomorrow we are getting the insurance. I said, no, I can't release. Then I said, okay, if I release it, then I am the insurer. They said, no, sir, he has submitted the proposal. Tomorrow only we will get the confirmation. I said, okay, in that case, we will release the facility tomorrow. So insurance is one. You should never, ever disperse the facility until and unless the insurance is fully complied with. So remember, when you're answering the question, think about it, that insurance, you should have it here, that you must confirm that insurance. If you are answering a question on immobile property, if there's a building, mention. In addition to that, I will ensure the insurance have to be obtained to cover the full value of the building as per value of stipulation. If it is movable, you have to cover the insurance covering the movable. Now, immovable property, when you are taking immovable building, fire insurance is a must. Burglary for immovable is not necessary. Movable, I gave you an example. House of Passions, they may have fire insurance, but they don't have burglary cover. I am 100% sure they won't have burglary cover, because if they ask for a burglary cover from the insurer will give happily, knowing very well there is no risk. But to avoid that, they are not taking. They may have taken a burglary on a first loss basis, which I explained. But if it is a jewelry person, a person who is involved in wristwatches or gems, you have to ensure burglary cover. Why? Entire stocks could be dumped in a suitcase and taken. Then what is insurance? I explained to you all. Now these clips I am showing to drive my point so that it makes my point, the message is very strong for you all. Now you could see it could happen anywhere. Fire Trapico, then No Limit Building, then Hamedia's, Cool Planet. Then now this is a very important slide. Man-made calamity, natural calamity. These two are beyond your control. So you have to depend on insurance. Now this is this I think a couple of weeks back, I told in my session, a girl without a license She was driving a vehicle and she had gone and banged into a showroom, a merchant who was selling motor vehicles. And now they will have a problem because the insurer may not honor the claim because this girl didn't have the license. Because when you are issuing a insurance, it's one of the conditions you will always ensure that my vehicle will be used by a person who is in possession of a valid license. But of course, the showroom people, they would have got a insurance. They would have got an insurance covering their vehicles. If they have not got an insurance, now they are in trouble because they have to claim from this girl. But this girl has to claim from the insurer. Insurer may not honor the claim. Why? Because the owner has allowed the vehicle to be driven by an unlicensed driver. So this is also an unexpected situation. Now, this particular one, can you all tell me where is this? Can you all tell me? Now see, this is in Jaffna. This appeared in today's papers, Times. This morning's Sunday Times, they have published this. So this is a very, you can see most of the buildings have gone under water. So this is what the important aspect to be checked on insurance policies. Insurance should be obtained to cover the full value of the asset and not the value facilitative amount. Location of the asset, description of the asset, serial number of the asset, mortgage should be checked. When you are getting a policy document, check it very carefully whether the address location is correct, the address is correct, the assessment number is correct, because in case of a calamity, insurer may disclaim liability. Why? Because due to a typographical error, they have made a mistake, they have given some other number. So in case of a claim, they will not honor it. So when you are getting the policy document, you have to check it very carefully. Insurance policy should be assigned in favor. I have explained to you all. Effective machinery. You must have effective machinery should be in place to ensure the policies are renewed on time and on. Now, in other words, if you are a branch manager, credit officer, don't allow this responsibility, don't delegate this responsibility to your subordinate. Have it under your control. I am telling you all, have it under your control. Check it very carefully to face any eventuality. Then, building insurance and land value, I have explained. If there's a building, you have to insure the building and don't exempt the building just because the land value is adequate. Then fire insurance, I have explained. Burglary, I have explained. I have explained what is burglary on first loss basis. Now, these are the type, I think this particular slide was not there in the previous session. These are the types of policies. Fire policy, burglary policy, comprehensive insurance policy. But what do you mean by comprehensive insurance policy? When you say comprehensive insurance policy, if I am having a vehicle, it is, according to the traffic ordinance, it is compulsory that I should have insurance. I should have insurance. Why? Because when I am driving, I go and knock somebody, I go and damage somebody else's property, somebody else's parapet wall. That person will have a right to claim it from me. So I, in turn, I have to claim it from my insurer. So that is what is called third-party insurance. That is very cheap, 2,500 rupees. Now I have a car, I drive. I don't have a comprehensive insurance policy. I drive, I go and knock somebody, bang on somebody else's wall, house, gate, and that person could claim damages from me. I could claim from my insurer. That is what is called third-party insurance. My vehicle is also damaged. Remember, my vehicle is also damaged, but insurer will not pay any damage caused to my vehicle. Why? Because I have taken a third-party insurance. That is, I have taken a, that means any damage caused to a third party. So bankers, we don't want that policy. We don't want that policy. What we want is a comprehensive insurance policy. We call it comprehensive insurance policy. We call it full insurance. Full insurance. But that is very expensive. If you are having a vehicle, a brand new vehicle, to get a comprehensive insurance policy, you may have to pay 75 to 80,000 rupees depending on the vehicle. So sometimes some of the customers may try to avoid that by going for a third-party insurance. I have come across such instances. Some of the bankers, young bankers, lack of knowledge, little bit of knowledge, have taken this. Some of the young bankers, little bit of knowledge, have taken this policy. Why? Because when they saw the insurance document, they thought it's. Then we had to explain to them, no, you can't take this. Why? Because in case of an accident, in case of a damage, insurer will not honor any claim because this is a third-party insurance. And they will honor any claim which are resulted in damage caused to somebody else, a third party. So we don't. So you have to be very careful when you are getting vehicle insurance. Ensure that it is a full insurance. Go through the policy document very carefully, because some customers avoid that. The reason they avoid is the reason is because premium is very high. Premiums are very high. So because of that, they avoid that. So you have to ensure that insurance policy is obtained to cover the full value, not the, full risk. Full cover, we call it full cover, means comprehensive insurance. That means fire, riot strikes, burglary, if somebody comes and removes the vehicle, that is also covered. So that is what is called comprehensive insurance. So you have to be very cautious, train your staff also the aspect of full insurance, because they could be carried away. They come and give the policy, here the policy document, here the policy. At the time of taking the loan, they will, for the first year, they will take a comprehensive insurance policy. Second year, when the renewal is due, only they think, my God, I'll have to pay another 1 lakh. So they go and slowly convert that policy to a third-party insurance. And then when you are getting a confirmation, customer says, I have renewed the policy. Customer says, I have renewed the policy. What has happened? He has converted the original policy which you have obtained at the time of granting the loan into a third-party insurance. Slowly, yes, without your knowledge, he has converted into a third-party insurance. So you also have customer says, I have paid the premium, I have renewed. So you have to get the endorsement, renewal endorsement. Vehicle this is a high-risk area, because there are cases. I have come across in some of the banks where I was attached to, because I had the opportunity. I have visited all their branch network. And I was asked to visit their branch network. I came across such situation by lack of knowledge of the staff. Little bit of knowledge. When the insurance came, they thought everything is okay. No, that insurance is a third-party insurance. So vehicle, you have to be very careful, because the reason is customers, they know third-party insurance very cheap. 2,500 you can take. 2,500 rupees you can take third-party insurance. Vehicle insurance is very expensive. Then burglary policy on first loss basis. Then mortgage reducing policy. What is mortgage reducing policy? That is, if you are taking a housing loan, you take a policy called mortgage reducing policy. That means if the customer dies, whatever outstanding without any arrears, insurer will pay. By doing that, the customer is the breadwinner. The dependents are relieved, or they don't have the burden of carrying the loan. If a customer comes to a bank and takes a housing loan of 5 million by mortgaging the house, in case the customer dies due to an unforeseen situation, be it accident or this thing, whatever this thing, then the bank can, under normal circumstances, bank will be compelled to sell the property and recover the loan. In such a situation, the customer's dependents will be on the road. So we don't want that we don't want the dependents to face such an eventuality. To avoid that, always the bankers for housing loan, they take a mortgage reducing policy. And what do you mean by mortgage reducing policy? In case the customer dies, entire liability, loan outstanding will be settled by the insurer. So the customer's dependents could continue with their lifestyle. In marine insurance,
This is related to DPA policy, decreasing term.
Sorry, me?
This is related to decreasing term assurance.
Yes, same things. They call it some call it mortgage receipt policy, some call it term decreasing policy, some call it decreasing policy. Both are same. Different insurers have different terminology. It comes the same.
Okay.
It comes the same. That is in case of death or even disability. Some of the mortgage receipt policies have disability clause also. So they will honor the claim. So that is very important for housing loan. Then marine insurance, when you say marine insurance, if I am importing a vehicle from Japan, it is covered by a marine insurance policy. That means from port to port, till that vehicle arrives in Hambantota, till I clear, that is covered by a insurance policy. That is what is called marine insurance, especially when we are doing any importation. Third-party insurance, I explained to you all what is third-party insurance. We should never take third-party insurance. That means third-party insurance means any damage caused to a third-party, insurer will pay. My vehicle is also damaged. I have also sustained injuries. Insurer will not honor any claim sustained by me or any damage caused to my vehicle. They will not honor. So it is very important for us to ensure vehicle insurance, train your staff, the difference between a comprehensive insurance and a third-party insurance. Because why I am stressing this, I came across such instances in some of the banks where I was attached to. Lack of knowledge. I don't blame the staff. Lack of knowledge in these banks. When I was there, I conducted numerous training programs. We trained the staff of the important aspects of credit and lending, securities. So training your staff comprehensively is very important, because at the time of renewal, without your knowledge, customer may go and slowly renew it, convert that policy into a third party and renew it. How are you going to track it? You can track it if you get the renewal endorsement. When the endorsements are received, you have to ensure, you have to check it. You have to check it. That's why I always say insurance should come under the manager. When I was at HND, I used to always say it's like the Ministry of Defense. Whenever I put a person to handle insurance, I go through that person's track record and see whether that person, whether he has been very punctual in his attendance, whether he is not a habitual latecomer who doesn't go on leave very often. And in addition to that, I keep it under my purview. I don't totally depend on that particular officer. Although there was officer, I was never dependent on him. I also go and check it personally. I also used to joke. And he also knew that I will come and check any moment. And I don't tell him that I am coming on the first time checking, I am coming on the 30th. In between, I will just go to his table and say, can you get up? I sit there. I check it very carefully. So I was very, very particular. And we have, during our time, we have never gone wrong, and we have always ensured the bank's interest is protected as far as insurance. Because in my book, when you read my book, you will say there are so many episodes which I have shared. So remember, insurance is wherever you are working now, you are all of you are young people. There are managers, there are credit officers, there are people who are working in finance companies and all those things. Remember, insurance is very important. Not only the documentation, insurance is very important. Now see, when we were at HNB, before we put a person to credit department, we give that person a thorough training on securities. After that only we give them the credit, because they should know the important aspects as far as, anybody can grant a loan. There's a famous saying, anybody can grant a loan, but only an expert will know to set the facility. It's very important. Then, important aspect will be checked on the policy. This I have explained to you all in my previous session.
Excuse me, sir.
Yeah. Yes.
Under the third-party insurance,
Yes.
up to what extent will the insurer cover the damage?
That's a very good question. I think it goes up to 10 million, if I remember correctly. Yeah, that's a very good question. I also had a doubt, and recently I asked one of the CEO of an insurance company the same question what you asked. He told me, that will go up to 10 million. He told me. Is it clear?
Yes.
Good question. Yeah, I also had a doubt about 1 or 2 months back. I had the opportunity of meeting a CEO of an insurance company. I posed this question to him, and he said, no, we will go up to 10 million. So,
In case of a loss of life, sir, what will happen, sir?
Sorry?
In case of a loss of life?
That also they will pay.
Up to 10 million, sir.
Yes. You have to see the policy document, but most of us, we don't read the policy document. There are so many clauses there. That also you can claim, but the only thing is, it is not they are not going to pay over the counter. You have to go to courts.
Okay.
That will go on for years. They are unlike the other insurance policies. Here they are not going to pay the claim over the counter. You have to go to the courts, and it's a very tedious process. Very tedious process, but at least some comfort is there. So remember, as bankers, we are not taking third-party insurance. Remember, when the policy is due for renewal, it's a very vulnerable area. You could be carried away. Customer may slowly go and take it. There are customers who have asked us. I could remember when we were there. There were a couple of customers who used to come and ask me. I've asked our staff. I had to pay 1 lakh premium. 1 lakh premium. Can't you all accept third party? He said, no, we can't accept it. Now, even I could remember when my vehicle insurance, I was negotiating my vehicle insurance when I was missing. I told the insurer, he quoted a premium, this amount of premium. Then I told the insurer, that particular insurer, I told him, an elderly gentleman, I said, no, I am a very careful driver. I said, I have never claimed anything because I am a very careful driver. I said, I have 75% no claim bonus. I have come up to the maximum no claim bonus. Why? I have never claimed, because we are very careful in driving our vehicles. So I told this insurer, then you know what he told me? He said, sir, I know you are very careful, but the person who is coming behind you is not careful. That's all the truth. After he told me only, I also realized. He said, sir, you are very careful. You are very careful, but the person who is coming behind you is not careful, no, sir. And how he tried to convince me. So I said, yes, what you say is also correct. No, I am careful, but the person who is coming behind me is not careful. So remember, third-party insurance, this is a gray area, because if the vehicle meets an accident, you lodge a claim, insurer will say, no, this is a third-party insurance. But the only thing is, you have there's another way of tracking it. Once the policy is assigned in your favor, third comprehensive insurance policy, if the customer at the time of renewal wants to convert that into a third-party insurance, insurer cannot do it without your concurrence. Am I correct? So you have a mechanism to track that. Am I correct? Insurer cannot make any changes to the policy without your concurrence. Is it clear to you all? He can't do any changes. He can't exclude any covers. If they do that, then they are liable. But you have to be careful. But insurer, once the policy document is given to you, once it is assigned to you, customer has no authority, insurer has no authority to do any alterations to the policy. He can't reduce the policy, he can't convert that policy into a third party or whatever without your concurrence. Am I correct? Is it clear? Is it clear? Is it clear to you all?
Yes, sir.
Right. So anyway, good that you are asking question, because that's the reason why I am revisiting these slides. So if a bank has encountered such a situation like this, the flood insurance cover, just imagine some of the lethargic government officials, they have been sitting on the renewal. Now in 2017, the policy was due for renewal. They have been negotiating to get a better cover. In the meantime, within that intervening period, these floods have occurred, the cyclone, storm, or whatever it is. And as a result of that, they couldn't claim any. They couldn't lodge any claim from the insurer because they had to pay from their own funds. They had to pay. Now see, now the National Insurance Trust Fund of Sri Lanka failed to sign the reinsurance arrangement. That means they are not renewing, covering their policy, which was due for renewal 2 months prior to the floods and landslides in the country in 2017. According to the Disaster Management Center, DMC, the floods in 2017 in Sri Lanka damaged 2,788 homes, with a further 18,000 houses being partially damaged. The adverse weather condition impacted 14 districts. And under the Natural Disaster and Emergency Relief Insurance Scheme introduced in April 2016, Sri Lankan government announced compensation. 2.5 million for a fully damaged or partially damaged house. Billions of rupees had to be paid. They had to pay billions of rupees. However, this is very important. However, failure to sign the reinsurance agreement, that means they have not renewed the policy, and renewal of the insurance policy, which expired in April 2017, means the NITM will have to utilize its own funds to pay the compensation. So now just imagine if this has happened to a bank. If a bank has encountered such a situation due to the carelessness of the bankers in renewing the policy, the consequences will be disastrous. Consequences will be disastrous mean not only that particular manager or credit officer will lose the job, the bank will instead suspend them, and they will hold them responsible. Bank is not a charitable institution. So I have come across situation where some of the bank managers have been suspended for non-renewal of insurance policies. I know personally 1 or 2 cases where in a particular 1 or 2 branches where a calamity has occurred. When they went on audit, it was found they have not renewed the policy. They haven't. Manager was suspended from service. So remember, insurance is one area you can't deviate. You have to ensure that insurance policies are renewed on the due date. Important records I have explained to you all. Management and operation of secure documentation. All secure documentation obtained should be held under this thing. We have serious consequences faced by the bank due to lapses in documentation, its management, unable to realize advance, unforeseen circumstances, protracted legal action, interest income being deprived, loss of profitability, additional expenditure to the bank on the facility being transferred to NPA legal, prospect of losing the legal action. Just because you are filing legal action, that doesn't mean that you will be in a position to recover the liability, because there are cases where some of the banks have lost the legal action also. Now, question and answer. Now, I went through my presentation, and I saw some of the questions that you all have asked also I have answered. Just to make it, now I think one of the participants, she sent a message. I think she is also here. She was asking me, sir, what is the difference between hire purchase and lease? She wanted me to explain, so I have incorporated that. Basis for comparison: hire purchase, the deal in which one party can use the asset of the other party for the payment of equal monthly installment, is known as hire purchasing. Leasing is an agreement where one party buys the asset and allows the other party to use it by paying consideration over a specified period, is known as leasing. This is just to explain to the concern expressed by this participant. Then there was another question somebody asked, I think you asked, I think I know the person who asked this question. Some of the banks are utilizing, when they are taking personal guarantee, they are utilizing the funds of the guarantor to recover the liability, whether legally they are covered. Legally they are covered. This, I think you can see in the guarantee bond, there is a clause here. Clause number 1314. 1314, banks are covered under that. Now here they are saying, in addition to the bank may be entitled by law, the bank may at any time and without notice to me combine or consolidate or any of our accounts, currency account with any of our liability here under to the bank, and it's set off, realize, apply. So this particular clause covers the question what you asked the other day. That means if you are taking guarantee bond, in a guarantee bond, if the guarantor reads the guarantee bond, no guarantor will sign I have in my life never signed as guarantor, because the guarantee, when a guarantor reads the guarantee bond, he will not sign. But that clause is there. The clause is there. But we rarely utilize it. We rarely, although the clause is, but sometimes hardcore customers, we are compelled to do it. I know where, like one of the participants said, some of the banks are doing it. So whether they are legally, they are empowered to do it, they are empowered. Why this clause is there? Is it clear, miss? Is it clear?
Yes, sir.
Yes. So I think you asked me whether legally they are empowered. Legally they are empowered because this particular clause is there. But we don't do it. We rarely utilize this, but we are covered under it. Then I could remember there was another question somebody asked whether the London Stock Exchange is, they have opened a branch here, whether we can take their shares. The answer given by me is we don't take such shares. That is the correct answer. But going deep into the matter, just for your information, when we are taking any security, the main criteria which we have to remember is, in case of an eventuality, whether we could realize the exposure. Now, if you are taking any shares in Sri Lanka, in case of an eventuality, we have the authority to dispose the shares. Why? We have the power of attorney. The customer has given us an irrevocable power of attorney, and which may have to be produced to convince the authorities. Such an option is not available for us if we take the shares of the London Stock Exchange, because we have to before taking, we'll have to explore that option, whether they will take. You may have to send the irrevocable power of attorney to them, and all those things have to be adhered to. So it's a tedious process, because realization of the exposure will be in doubt. Realization of the exposure will be in doubt unless you do your homework. Unless you do your homework, and if a customer comes and gives it, then you'll have to send it to them, register the power of attorney, and then you'll have to get confirmation from them in case of eventuality whether they will accept our authority. And if those mechanisms are fully adhered to, you may consider. But generally, we don't accept it. In addition to that, you have to monitor the fluctuation of those shares also. Is it clear? Is it clear? So now, before I move on to the next topic, is there any questions on what we have discussed up to now? Now I have covered the securities in full. Securities in full I have covered. I don't think you will have any. The stories which I have narrated to you all, these are all true stories. I have not cooked up any stories. I have not made up any stories. As I told you all, in my 46 years of banking exposure, still we are learning. Still we are learning, since from some of the people who participated, some of the questions you all asked. Also, it's very interesting for us also to think about various things. So the stories which I have narrated are very important, because that's why my program is different, unique compared to the other program, because some other people used to say, sir, you come and share a lot of stories. This always remains with us. So I always narrate the stories, not with the intention of, what you call misleading the people, but these stories are very important. But these stories are all real stories, genuine stories. Even in the books, even in my book, you will find these stories are there. So now we are going to, now securities is over. Still, if you have any questions, you can always ask. Now we are going to move into the next important topic, letters of guarantee. The handouts are there. We have uploaded the handouts. This is a bank guarantee and its operational aspect. As credit officers, as bank managers, as people who are working in finance companies involved in credit and all, you all should know what is a bank guarantee and its operational aspect. This is a very vast area. Bank guarantee is a very vast area. I'm sure some of the people don't have a proper understanding about the bank. I mean, when I was at HNB, I was in charge of bank guarantees for more than 10 years. But There was never an instant where we have contributed towards any loss due to our lethargy or due to our mishandling. We have been very cautious because bank guarantee. We have, at the same time, we have earned more than 100 million as income to the bank. So what is this bank guarantee? Now it's very interesting session because I like this session because this is also one of my favorite subjects. This also I have shared this in my book, and if you have the time, you can always visit YouTube. My book launch is there in the YouTube. It was launched at the Central Bank. It was very interesting for you all because we had a gala book launching ceremony at the Central Bank. So you can just put my name, MCV Rajanathan, book launch. You get the full session, speeches made by the people who participated. Or you can even send me a WhatsApp. I can give you the link. That's very interesting for you all if you are interested. So what is this bank guarantee? Now this is the fourth session. This session covers the important aspects of bank letters of guarantee, the operational and management of such guarantee, and the connected mitigation techniques, all of which will be explained in detail during the session because this is a very interesting session, very important session for you all. What do you mean by bank guarantee? Banker's obligation on a bank guarantee. Now, in the play Merchant of Venice by William Shakespeare, Antonio guaranteed a loan taken by his friend Bassanio from Shylock. It nearly cost him his life. Let him look to his bond, said Shylock to Salario in the streets of Venice. So when you see the Merchant of Venice, what you call play, this is there. When we talk of bond, because what happened, I think this Shylock, they borrowed something from Shylock, and Shylock, he told, because he had some personal animosity from Antonio, he said, Shylock said, okay, I will give you the money. I don't want any money. I don't want. Then Antonio guaranteed, and the Bassanio, his friend, was expecting some shipment. And he said, the shipment is expected, so I am 100% sure shipment will arrive on time. And so Shylock said, okay, in case the shipment doesn't arrive on time, I want 2 kilos of your flesh. 2 kilos of your flesh. Then Antonio was so sure of getting the shipment, he also agreed and signed the guarantee, saying that if they don't repay the money, he will pay 2 kilos of his flesh. You see, read the Merchant of Venice play. It's very interesting. You can read. So when the shipment didn't arrive, they pleaded with Shylock. What did Shylock say? Let him look to his bond. He said, look at the bond where you have said that you will give 2 kilos of your flesh. So when we talk of bonds, guarantees and undertakings, various aspects comes to our mind. However, our bond, I think it has complication. However, our bond, the bond which we bankers issue, is essentially a financial obligation and nothing else. So now definition of a bank guarantee. What do you mean by a bank guarantee? Now see, we are getting guarantees from customers. That is a different guarantee. When we get guarantees from our customers as security for a loan, if the customer defaults, we write to the guarantor and demand the payment. And we write to the guarantor and say, so and so we have granted a loan to Mr. A against your personal guarantee. He has defaulted. So therefore, we hereby demand. So when we demand, do the guarantors come and pay? According to your experience, do they come and pay? You write a letter to the guarantor and say, in terms of your obligation, you are hereby required to honor the claim. Do they come and pay it? Yes or no? Yes or no, according to your experience?
Sometimes they may make some pressure on this principal who borrow the money. Then through that, we are able to get this.
All right. So yes. So you had to struggle a bit. Am I correct, Miss? You had to struggle a bit to get it. Yeah. They don't come and pay the money on demand. So that is the guarantee what we bankers get from customers, guarantors. We are also issuing guarantees. The guarantee what we issue, a bank guarantee, is an abstract and an irrevocable undertaking given by a guarantor to effect payment against presentation of a statement by the beneficiary to the effect that a contractual agreement has not been fulfilled. So now, it is a collateral promise to answer for a debt, default, or miscarriage. It is a readily accepted form of security, easy to obtain and complete. It's a very simple form of document. Now, before going into that, I am going to ask you a simple question to test your your knowledge. So don't worry, you have to answer. I'm not going to ask any pinpoint anyone, but I expect to answer from you all. And give you a good example. When I was at HNB, we issued a guarantee favoring Sri Lankan Airlines. One of our customers, a customer who was engaged in garment business, he has got a contract from Sri Lankan Airlines to supply uniform to Sri Lankan Airlines. He has got a contract from Sri Lankan Airlines to supply uniform to Sri Lankan Airlines. So, Sri Lankan Airlines told this customer, okay, we will give you the contract. He made applied and we will give you the contract provided you get a bank guarantee for 10 million from a bank. Provided you get a bank guarantee for 10 million from a bank. So this customer came to us, approached us, HNB, and told us, I have been successful in getting a contract from Sri Lankan Airlines to supply uniform. So one of the requirement is they want a bank guarantee from a bank for 10 million. And the customer asked us whether we could issue a bank guarantee. So because he was one of the top customers, so we issued a bank guarantee favoring Sri Lankan Airlines. But what did we say in our bank guarantee? In our bank guarantee, we mentioned, we may have come across the wordings of bank guarantee, we mentioned in consideration of our customer A being granted the contract to supply uniform, we, HNB, hereby guarantee, confirm that we will pay you 10 million. We are saying that we were telling that we will pay you 10 million in case the uniform supplied by our customer is not up to your specifications and standards. We further said, we will pay you this 10 million on demand without any contestation demand. Immediately the moment the demand made, we will pay this 10 million. So you may ask, how can HNB give a guarantee to Sri Lankan Airlines saying that the uniform to be supplied by this customer will be up to their specifications and requirement? You may be asking. But that's how bank guarantees work. Depending on the customer's integrity, we gave a simple confirmation guarantee to Sri Lankan Airlines. We didn't check this customer's uniform. We didn't send we didn't go and check everything. But we just simply told Sri Lankan Airlines the moment we hereby guarantee that the uniform to be supplied by our customer will be up to your specifications. And in case if this uniform is not up to your specification, the moment you demand, we will pay you 10 million without any contestation. That means, in other words, in a bank guarantee, remember, I always say in a bank guarantee, the banker's lips are sealed. We can't talk. We can't talk. Our lips are sealed. So we issued the bank guarantee. 10 million we have issued. One of our good customer, we issued the guarantee. Subject matter was closed. What happened? After issuing the guarantee, one day, a gentleman walked into our bank, a true story, came to me. He came straight to me and gave a document, an envelope, big glass, large envelope. I saw Sri Lankan Airlines, from Sri Lankan Airlines, addressed personally to me. Addressed personally to me. He said, I am coming from Sri Lankan Airlines. I am coming from the chairman's office, he said. And then I offered him a seat, and then I was shivering. I opened the document. When I opened the envelope, there was a letter from Sri Lankan Airlines, simple letter, addressed to me, and it says, they have put my name, I am the person who signed the guarantee. Dear sir, caption is guarantee amount, number. This is in reference to the guarantee issued by you. I think briefly I am giving you the contents. In this connection, we wish to inform the uniforms supplied by your client, your customer, Mrs. So and so, are not up to our specifications. Are not up to our specifications. In terms of your guarantee, we hereby demand the payment of 10 million immediately. Please issue your bank draft for 10 million, and some chief accountant, I can't remember, somebody has signed it. The letter came to me. The letter came to me. So then, when the letter came, I was really stunned, and I had to pay him. I can't talk. So then, when I told this particular gentleman who came and said, "Sir, I am coming from the chairman's office. I have been told to sit and collect the check and come, draft and come," he said. He said, "I have been told to collect the draft and come." Yeah, we had to pay 10 minutes. Then I told him, okay, give me some time. No problem, give me some time. So then that particular gentleman said, okay, I will just go out and come. I am asking you a simple question. Let us assume that you have issued a bank guarantee favoring Sri Lankan Airlines for 10 million. Put yourself in my shoulder. Put yourself on my seat, and you have got this letter. What will you do? I am asking, what will you do? If you have got this what will you do? You have got this letter from Sri Lankan Airlines demanding 10 million. Your lips are sealed. You can't talk. What will you do? What's the first action you will take? Can you all tell me? You don't have to worry. I am just assessing, testing your knowledge. This is a general knowledge. You as a banker, you have issued a guarantee. Sri Lankan Airlines sent a letter to you demanding the payment, saying the uniform supplied by your customer is not up to their specifications. How will you? What will you do? What's the first thing you will do when you got the letter? Can you all think?
Put the receipt stamp and
Sorry?
put the receipt stamp
Yes.
with the date I have received this.
Right.
And thereafter the legality of this claim, I have to check with my legal. And after informing to my applicant, the customer, then we have to honor the claim that is
Right.
we have undertook. But since we have the indemnity also there.
Yes. Yeah, very good, excellent. You are giving the correct answer. First thing you will do is you will put the receipt stamp. I didn't think about the receipt stamp, but you have told very good. So that's the first thing you have to do, because you have to put the receive stamp. Honestly, I didn't think about it, but you gave me the correct answer. So you are a very prudent banker. First thing you have to do is you have to put the receive stamp, and then you said you will contact the legal department and you have to honor the claim. So any others who have a different view? Any others who have a different view? Any others who have a different view? Anyway, so when you get the guarantee, she said, first thing you have to do is you have to put the receive stamp. That is very important because that will confirm the guarantee claim has come within the expired data, whatever it is, we'll explain to you later. So then once you get the claim, what I did was, I am telling you all, what I did was, I didn't contact our legal department. I must confess, I didn't contact my legal department because I have already confirmed to the to Sri Lankan Airlines, I will pay 10 million. So I can't talk to Sri Lankan Airlines. There is no necessity for me to give a call and speak to Sri Lankan Airlines because my lips are sealed. I can't talk to them because my document, like the Shylock said, like what Shylock said, that's why I put Shylock's wording. Look at my bond. Shylock said, look at my bond. So if I have spoken to Sri Lankan Airlines would have told me, look at your bond. So then what I did was, but as a matter of courtesy, I am not under obligation to speak to the customer. But as a matter of courtesy, I contacted my customer, the garment manufacturer. I contacted my customer as a matter of courtesy. I am not under obligation to inform him. I am not under obligation to inform him. So as a matter of courtesy, I informed this customer saying, you know, this is regarding your guarantee. We have got a claim from Sri Lankan Airlines. What do you think the customer would have told me? What do you think the customer would have told me? What do you think the customer would have told me? According to your assessment, what do you think the customer would have told me? If you have contacted the customer, what do you think the customer would have told you? Will he tell you to, yes sir, the uniform supplied by me is not up to the standard, so you can debit my account and pay it? What do you think he would have told you? When you inform the customer, will he tell, what do you think? He would have told you, yes, the uniform supply, there was some problem, so the uniform was not up to the standard, so therefore debit my account and pay. Do you think he would have told you like that? What do you think?
No, he would have denied. He would have said there's nothing wrong with what he did.
Yeah, very good. Excellent. Excellent. If I told you there's nothing wrong in my uniform, very good. Very good. Good answer. That's so same thing customer told. When I informed the customer, he said, no, the uniform supplied by me was up to date. Sri Lankan Airlines, they are always like, they're very difficult to satisfy them, he said. So don't pay, he said. He said, don't pay. Don't pay, you know, the uniform. We are supplied up to their specification. They are very difficult to satisfy them, but don't pay, they said. But then what, you know, what as a banker, what is my responsibility? There's a dispute. Sri Lankan Airlines says uniform is not up to their specifications. Customer says no, it is up to their specifications. Then whatever I got to do, I had to stop everything, go behind the fashion designer, take the fashion designer, go to Sri Lankan Airlines, go with the customer, and to see who is correct. No, that is not my responsibility. As I told you, my lips are sealed. I can't talk because we have, our obligation is essentially a financial obligation. We inform the customer as a matter of courtesy. So we have, our obligation is is a financial obligation. Like that Shylock said, look at my bond. If you have told Sri Lankan Airlines, no, our customer says he has supplied the uniform according to your specifications, he'll say, no, why are you talking to me? Look at your bond. Look at the bond what you have given. This is a Shylock's word. I put that there because that is very, very relevant. He says, look at my bond. So our bond is essentially a financial obligation. Whatever the customer may say, customer may resist. He may resist. He may resist. He may say, don't debit my account, but we have to pay. Because if we have, and we have to pay on demand, within half an hour we have to pay. No, that person who came from Sri Lankan Airlines was seated in my department, and he has been instructed by the chairman Sri Lankan Airlines to collect the check, draft and come. So because we have issued millions and millions of worth of bank guarantees to Sri Lankan Airlines on account of so many customers. So if there was any delay on our part, and if they are delayed or if they are refused, Sri Lankan Airlines would have taken a decision not to accept any guarantees from this bank. Why? Because they never honor our claim. They never. There are some banks which have been blacklisted by some of the organizations because they say there are some customers who come and say, no, we want a guarantee from this particular bank because the beneficiary says, get the guarantee from this bank. These banks, we are not accepting guarantees from these banks, some other banks. Because why? They have been always delaying, they don't honor the claim. So this is the concept of the bank guarantee. I have explained to you all the concept of bank guarantee. Bank guarantee is a high risk, dangerous instrument. At the same time, it's highly beneficial to the banker. Why we are taking a very big commission. So you all correctly said, both the participants who spoke give the correct answer. First thing, you put the rubber stamp, then if necessary, you can find out from your legal department. But if you have issued a guarantee according to the terms, you can always refer to the legal department to get the opinion to delay the guarantee. You can't delay them because in the guarantee terms, you have said we will honor the claim without any contestation. Bank guarantee, we are using the word contestation. That means we are not going to contest. And we will pay without any demur. We will pay on demand. So this, you have to understand this particular principle, this particular procedure applies to all bank guarantee. Whatever bank guarantee we are issuing, remember, when at the moment a claim is made, we have to honor. We inform the customer. Even though the customer says don't honor, we can't take the customer's word. As a matter of courtesy, only we inform the customer. We tell the customer. We have an obligation to inform the customer. We tell the customer, we have got a claim. As a matter of courtesy, we are going to honor it. He said, no, don't honor it. You may say, don't honor it, but we are liable to honor the claim for which we are taking security and all those things. Any questions on that? Is it clear to you all? Any questions? Right. So now we are coming to I'm just moving to the other slide. International guarantee. Doing business with entrepreneurs in foreign countries involves greater risk than doing business in our own country. You will find it difficult to assess the integrity of the entrepreneurs and their ability to execute an undertaking due to inability of accessibility as they are thousands of miles away. This explains the great importance of the bank guarantee, which acts as a safety net for both parties. Now, important aspects of local international guarantee. A bank guarantee is a surety or a guarantee issued by a bank on behalf of its customers for the benefit of a domestic or foreign beneficiary. For what purposes we are issuing the bank guarantee? That is what the first one says. A foreign bank guarantee refers to an obligation issued for the benefit of a foreign beneficiary. An exporter or an importer could request for a bank guarantee from its foreign trade partner to guarantee the fulfillment of a contractual obligation. It is advisable for the exporter importer to ensure with the assistance of their bank that the guarantee issued is valid and binding. Standby letters of guarantee. Standby letters of guarantee is a guarantee in the form of letter of credit. It's an obligation in relation to the main contract and subject to the ICC Uniform Customs and Practice for documentary credit by the ICC. Standby letter of credit, although treated as a documentary credit and covered in the UCP, essentially it performs the functions of a bank guarantee. The standby letters of credit was originally developed in the United States, and the American laws prohibit the terminology of bank guarantee. Evolution of a bank guarantee, the issuance of a guarantee has developed to a greater extent, as a result of which, in today's business world, the buyer wants to ensure the other party fulfills his obligation. In international trade, it is difficult for the importer of goods and services to accurately assess the professional ability and financial stability of the exporter, supplier who is thousands of miles away. Under this context, bank guarantee plays an important role and becomes the bridge of trust. Now, guarantees. In banking, the use of guarantees and its risking should be clearly understood by the bankers involved in making important credit decisions. This is a very high risk instrument, And at the same time, it is also highly remunerative. Now, it's a very remunerative for the bank. This guarantee is completely different from the guarantees we as bankers obtain from various individuals, firms and corporate entities to secure our exposure. Obligations under the such guarantees are rarely fulfilled. Standby letters of credit also falls under this category. Now, guarantee on first demand. But guarantees on first demand are widely used in international trade and local trade. They are payable on first demand, and the bank cannot and has no right whatsoever to refuse or postpone the payment. The bank is obliged to pay the beneficiary on first demand after having examined the provisions of the guarantee's validity and all its conditions. So, in other words, in all our guarantees, we are saying we will honor the claim on first demand. When we are issuing a bank guarantee, we are telling the beneficiary, we will honor your claim on first demand. That means the moment you make the demand, we will honor the claim. We can't tell the beneficiary, can you give us 2 days? Can you give us time till 4:30? No. That's what that person who came to collect the draft has been instructed by his superior to sit and collect the draft and come. So we paid it, we honored the claim. Because we honored the claim because our guarantee, our obligation was very clear. Only things we just referred to our superiors, and then they gave us the okay to be paid. You have no way of postponing, debit the customer's account, whether there's money or not, we have to honor. So guarantee on first demand are widely used in the international trade. International local trade. They are payable on first demand, and the bank cannot, remember, and the bank cannot and has no right whatsoever to refuse or postpone the payment. You have no right. You have no right whatsoever to refuse or postpone the payment. The bank is obliged to pay the beneficiary on first demand after having examined the provisions of the guarantee's validity and all of that. So when the claim is made, we have to check the guarantee, we have to check their claim, and we have to ensure whether the claim has been lodged within the expiry date, all those things. And once you are satisfied, you have to honor the claim. Now, guarantee and indemnity, I think this was explained in our previous sessions also. In a guarantee, the guarantor undertakes the liability on the default of the primary debtor. The guarantor says, if the principal does not pay the liability, I will pay. Indemnity, in an indemnity, the indemnifier undertakes to be principally responsible for the debt. The indemnifier undertakes to be principally responsible for the debt. Now, what is a guarantee? Why a guarantee? What are the benefits? Now, these three aspects have to be understood by you. Important factors of a bank guarantee. What is a guarantee? Why a guarantee? What are the benefits? Now I am coming into the real topic on this bank guarantee. What is a guarantee? It is a cash transaction. But what is a guarantee? It is a cash transaction, nothing else. Although we are giving various purposes in the guarantee bond, we say the moment the uniform supplied by our customer, if it is not according to your standard, we will pay. The goods supplied by our customer is not up to your standard, we will pay. This customer will ensure that he sends the goods to you, to your warehouse within the specified period. All those purposes we say, but after everything will ultimately boil down to a cash transaction. So what is a guarantee? Bankers have to understand it is solely a cash transaction and nothing else. You must remember, when you are issuing a guarantee, remember your obligation is essentially and solely a cash transaction. Then why a guarantee? Why are we issuing guarantee? To meet the financial, technological, and various other aspects. Just keep me, look at this slide. I just have a cup of water and come. Just look at this particular slide. Right. So now, what is a bank guarantee? Unlike other guarantees, the guarantees what we bankers issue is a cash transaction, nothing else. You may put various purposes. Customer may come and tell you, I want a guarantee for this purpose, for that purpose. I'll explain to you all. It is only a cash transaction. Then why a guarantee? Why are we issuing a guarantee? Why the customer is asking for a guarantee? Why is Sri Lankan Airlines asking for a guarantee? Because the reason is to meet the financial, technological, and various other types of obligations. So to meet the financial, technical, and technological, and various other types of obligations. Then what are the benefits? What are the benefits? The benefits are its advantage with regard to the liquidity. The customer need not go and block 10 million rupees to Sri Lankan Airlines. In other words, we are issuing a correct certificate. In other words, we are just issuing a correct certificate based on the past performance, integrity of our customer, of his ability to fulfill the obligation. We are issuing a correct certificate. At the same time, the customer need not go and block his money of 10 million with Sri Lankan Airlines because he can utilize the money for some other purpose. So in other words, we are issuing a correct certificate. It's beneficial for both for the customer and the bank. It is beneficial for both for the customer and the bank. Less documentation, resource management. There is, unlike a credit facility, if you are giving a credit facility of 10 million to a customer, you have to utilize a lot of resources to monitor the advance, to recover the advance. There is management time for you, but here you don't have to do anything. Just simply, prior to issuing the guarantee, there are so many things which you have to look into it. After adhering to all those requirements, you have to just simply issue a guarantee letter, and there is no documentation. There is no management cost. Nothing is there for you. Then highly remunerative to the bank. It is highly remunerative to the bank. Now, less documentation, resource management, highly remunerative to the bank, because unlike loan, here you don't have to you are not charging any interest. You are only charging a commission upfront. If you are issuing a guarantee for 10 million or whatever the duration, you are charging a guarantee. At the time of issuing a guarantee, you are charging a commission. So it's a very highly remunerative. In other words, you are issuing correct certificate at a fee. In other words, you are issuing a correct certificate at a fee. Then protection available on a bank guarantee. Now see, is this concept clear to you all? Or any questions on this? Is this concept clear to you all? What I explained? Now, protection available on a bank guarantee. What are the protection available on a bank guarantee? Attestation, motivation, compensation. If there's a question, name the two protection available on a bank guarantee, the answer is good. So I will explain to you all what are these. Before that, parties to a bank guarantee. In a bank, if there is a question, how many parties are there in a bank guarantee? Applicant, beneficiary, the guarantor. When you say applicant, the customer who is seeking the guarantee facility from your bank is the applicant. The person who is seeking the facility from your bank is the applicant. Beneficiary, the entity to which the guarantee is issued. Now, in this case, that earlier case which I quoted, Sri Lankan Airlines, they are the beneficiary. Why? We are issuing the guarantee in their favor. They are the beneficiary, Sri Lankan Airlines. Then guarantor is the bank. So if there is a question, how many parties are there in a bank guarantee, and name these three parties: applicant, beneficiary, guarantor. Applicant is a customer, beneficiary is the party to which you are issuing the guarantee, guarantor is the bank. Then applicant. The applicant is the person, entity which makes a request to issue a guarantee which is based on their contractual obligation. Then guarantor. The guarantor is the bank which is called upon to issue the guarantee at the request of the applicant. The guarantor is the bank which is called upon to issue the guarantee at the request of the applicant to the beneficiary. The guarantor is under the primary obligation to make the payment to the beneficiary on first demand in the event of a default of the obligation or non-fulfillment of the contractual obligation. The beneficiary is the entity person in whose favor the guarantee is required to be issued. It is such entity which makes a request for a guarantee under varying circumstances depending on the event, thereby protecting themselves by a monetary gain in the event of a default or non-fulfillment of the contractual obligation. Then applicant, beneficiary. Just to revisit this slide again, in a bank guarantee, there are three parties: applicant, then guarantor, then beneficiary. Applicant, beneficiary, guarantor. Then important aspects to be considered in a bank guarantee. When you are issuing a bank guarantee, there are certain important aspects which you have to adhere to. What are they? Number one is the integrity of the customer. Number one is the integrity of the customer, because it's like issuing a correct certificate. We should have absolute confidence in our customers' ability to fulfill the contractual obligation, because we are simply giving a correct certificate. We are simply giving a correct certificate. Of course, we have taken the necessary precautions in case if the customer fails to adhere to the obligations. So the main thing in the bank guarantee is the integrity of the customer. That is very important. Then number two is the security. Number two becomes the security. That means in case if there is a failure on the part of the customer, in spite of all the precaution taken, in spite of all the precaution we have taken, even though his integrity is beyond question, beyond doubt, there may be instances customer may fail due to a variety of reasons. Customer also may fail. Now, even when you are granting a loan, we are granting loans to first-class customer, but still for all we are taking security. Why we are taking security? Because in case the customer fails, we should be in a position to fall back on something to recover our liability. As I told you, in a bank guarantee, remember, in a bank guarantee, your lips are sealed. You can't talk. In a bank guarantee, your lips are sealed. So, number one, you have to consider the integrity of your customer, very important. Then comes the security. If you have complied, adhere to these two important aspects, then you can issue a bank guarantee. Now, see, in securities, we say value, title, ownership, then value, then the mortgage. But bank guarantee, integrity, security, then the guarantee. Security aspects for a bank guarantee. What are the securities normally we take for a bank guarantee? The guarantee constitutes a major credit risk. Now, when you are issuing a guarantee, it's a major credit risk. Unlike when you are granting a loan, of course, there are so many mechanisms available to you. You can file legal action, you can realize the security, but here your obligation is immediate. The moment customer defaults, the moment a claim is made, on first demand, your lips are sealed, you can't talk, you have to honor the claim. The current guarantee constitutes a major credit risk. Hence, generally, the bank calls for strong security. Normally, when we are issuing a guarantee, generally, we insist on a very strong security. The reason is because we don't know what time the claim will be made, because the claim, when the moment the claim is made, we can't tell the Sri Lankan Airlines, can you give us time? We are taking this type of security, we are taking immobile property, we are trying to sell the property, we are taking movable, we are taking life insurance policy, we are taking some shares, we are negotiating for a better price. Now the share market is down, we are going to sell the shares. You can't do that. So the guarantee constitutes a major credit risk. Hence, generally, the banks call for strong security. Then generally, marketable securities are preferred. Normally, for guarantees, we always prefer marketable security, means realizable, easily realizable security. Easily realizable security. Generally, marketable securities are over the without going through all these difficulties, within easily we can realize security. What are the securities which you could easily realize? Can you all tell me what are the securities which you could easily realize? Any suggestions from you all? What are the securities which you could easily realize for bank guarantees?
Cash.
Cash, very good. Yeah, very good. Cash. We prefer cash because generally when we say marketable securities, cash is, it could be easily realized. So in addition to that, there are, you can take shares as security, surrender value of life insurance policy. Then there are first class customers. We establish them, we give them a guarantee limit. We may establish a guarantee limit against immobile property or whatever. We establish a guarantee limit, and within that limit also we can operate. Then, however, the integrity of the principal plays a major role in determining the risk involved. Now, these three concepts have to be understood by you. However, the integrity of the principal plays a major role in determining the risk involved. Now, see, now this particular customer who has approached the bank for a bank guarantee, Sri Lankan Airlines, how did we issue a guarantee for 10 million to Sri Lankan Airlines, confirming the uniform supplied by him will be up to their specification, because we had absolute confidence in the customer's ability to honor the claim, because we were under the impression that this customer's uniform will be up to their specification. So we have convinced ourselves. But unfortunately, when it went to Sri Lankan Airlines, they said they were not willing to accept it. But it is not our role, it is not our responsibility to convince Sri Lankan Airlines. No, that is not our responsibility. We can't tell Sri Lankan Airlines, no, why don't you check the uniform again and see whether, because customer says, we can't, customer says the uniform supplied by him is up to our specification, up to your specification. Why don't you re-examine it? We can't say that. We can't say that. We had, like Shylock said, if you had told that, Sri Lankan Airlines would have told you, see your bond, check your bond, nothing else. So, however, the integrity of the principal plays a major role in determining the risk involved. Then types of guarantee. Now, this is very important for you to remember. Everything is important, but here I am going to explain to you all the various types of guarantees which we are issuing. Now, tender bond. Now, these are the guarantees in the banks we issue. Performance bond, retention, advance payment guarantee, financial guarantees, BGC guarantees, credit guarantees, shipping guarantee, conditional guarantees, counter guarantee, letters of undertaking. Now, these are the guarantees which are generally issued by the bank. Now, I'm going to explain to you all each and every guarantee. I am going to explain to you all. Listen to this very carefully, not only for the exam, for your own own understanding. You should know the circumstances and the situations under which these guarantees are issued by the bank. So, listen to it very carefully. Types of guarantees. Tender bond. Number one is tender bond. What do you mean by tender and bid bond? Tender bid bond is a guarantee a prospective tender is required to furnish at the time of submitting an application for a bid. This is obtained to ensure the payment of the guarantee amount in the event of. Now, take for instance, I'll give you a good example. Sri Lanka Telecom. Let us assume Sri Lanka Telecom. One morning, when you open the newspapers, you have found Sri Lankan Airlines, Sri Lanka Telecom. One morning, when you open the newspaper, you find Sri Lanka Telecom has published a notice in the papers, in the newspapers. They say that we have Sri Lanka Telecom has decided to computerize their HR division, Sri Lanka Telecom, they have about 5,000 people working under them, working in their organization. So they have decided to computerize Sri Lanka Telecom. We have decided to computerize it. So it's a big project. So they say, in other words, they say we are inviting applications from prospective people who are in a position to undertake this contract. So they would have used different terminology. I am using a terminology which could be understood by you. I'm using simple English, but they use different terminology. They say, Sri Lanka Telecom, we have decided to computerize our HR division because we have about 5,000 people working in our HR Sri Lanka Telecom. We have about 5,000 people working. The HR Human Resource Division is, mandated to maintain all these records. All these are maintained manually. So now we have our management and decided to computerize it. So this project is a very big project. It's going to cost a big amount. So we are inviting people who are in a position to undertake this contract. They are saying we are inviting people who are capable of undertaking this contract. That means to computerize the entire HR division. Then when you saw this notice, you are also sometimes you also may be tempted to apply. Now, so today we see a lot of young people like you all. You are very competent in this technology. You are very competent now. See, when you are working in banks, we are coming across situation. Even the young people, they are very, very competent in this technology. They know everything. So when you see this as a banker or as a person who is involved in credit or whatever, holding a responsible position, when you saw this notice in the Sri Lanka Telecom notice in the papers, you are also tempted to apply. You may think, why don't I also try this? Because I have some friends who are very competent in IT. I can seek their advice. So why don't I also apply? So you contact one of your friends and say, you tell, the Sri Lanka Telecom, shall we apply? So your friend also, yes, madam, you apply. I will also help you. So you apply. So Sri Lanka Telecom will get about 1,500 applications from various people who are interested. But in that notice, they have put a clause. In the paper notice, they have put a clause. They have said, however, all applications should be supported by a tender bond for 10 million. That is what is called tender or bid bond. Some call it tender bond, some call it bid bond. In other words, we bid. That is what is called bidding. So we bid. They are asking people to bid. So that means they are asking people to submit the application. So they are given all the requirements. Final para they have said, however, please note all the applications should be supported by a tender or bid bond for 10 million. Why are they putting the 10 million? Why are they putting that requirement? By putting that requirement, they are eliminating all the sundry people like us. Small time people like you all, you can't apply. Can you go and get a bank guarantee for 10 million, bid bond for 10 million from a bank? No. So if they have not put that clause, they would have got about 1,500 or 2,000 applications, which would have made their task difficult in selecting a suitable person. So to avoid that unnecessary bidding, eliminate all the sundry bidders, they have put that clause. So by putting that clause, the applicants have been reduced to only 5 or 10 people, because how many people will be able to get a bank guarantee overnight for 10 million? Only the people with high integrity, high reputation can go to a bank and get a bank guarantee for 10 million. So Sri Lanka Telecom, to make their task easier, the process easier, the eliminating process easier, the selection process easier, they have put this clause. we want a bank guarantee, tender bond. This is what is called bid bond or tender bond. We call it tender bond or bid bond. In other words, a bank guarantee, bid bond. We call it bid bond for 10 million. So now you can't apply. Can you apply? You can't apply because they want a guarantee for 10 million. Can you go and get a guarantee for 10 million? You can't get a guarantee. I can't get a guarantee for 10 million. So what happens? So they have, to make their task easier, tender bid bond is a guarantee. The prospective tender is required to furnish at the time of submitting an application for a bid. This is obtained to ensure the payment of the guaranteed amount in the event of the bidder tenderer withdraws from the offer and to cover any non-acceptance by the bid tender. So now, as an example, take for instance, as an example, we will take IBM. As an example, IBM is not involved in this, but I'm just, as an example, let us assume IBM is your customer. They are involved in IT. So they approach, when they are seeing this ad, they are interested in applying for this because they have enough resources to undertake this contract. So they come to your bank and they ask your bank to issue a bid bond for 10 million guarantee favoring Sri Lanka Telecom. So you are issuing a guarantee on behalf, at the request of IBM, one of your reputed customers, a customer who is whose integrity is what you call not in doubt, highly reputed people. So they have come to your bank and you want to issue a guarantee for bid bond for 10 million. You issued a bid for 10 million. So when you are issuing the guarantee for 10 million, what do you say? You are telling Sri Lanka Telecom, you are issuing a guarantee for 10 million. I think there is some disturbance, so better to avoid that. So you are issuing a guarantee for 10 million. What do you say? You are telling Sri Lanka Telecom, at the request of our customer, IBM, we are issuing a bank guarantee. We hereby issue a bid bond for 10 million. We are issuing a bid bond for 10 million. We say at the request of our customer, IBM, we are issuing a guarantee for 10 million. And what do we say? We say, in case you decide to award the tender, in case you select IBM and you select IBM to award the tender, that means you select IBM to execute the contract. And if IBM refuses to accept the what you call contract, we will pay 10 million. That's what's called bid bond. That means in a bid bond, this is obtained to ensure the payment of the guaranteed amount in the event of the bidder tenderer withdraws from the offer. Now see, IBM has come to your bank for a tender bond. You have issued a guarantee for 10 million, but this is a bid bond, tender bond or bid bond. You know, some call it tender bond, some call it bid bond. Both are same. So we are issuing a guarantee to Sri Lanka Telecom, and we say this is with reference to your tender. And at the request of our customer IBM, we are issuing a bid for 10 million. And in case if IBM is selected, and if they refuse to accept that offer contract, we will pay you 10 million. That's what we say, 10 million. So we issue the guarantee. We issue the guarantee favoring Sri Lanka Telecom, given it to IBM. IBM has sent it. So it has gone to Sri Lanka Telecom. Sri Lanka Telecom, and we put an expiry date also. And Sri Lanka Telecom says, Sri Lanka Telecom has taken about 3 to 4 months, because in the guarantee, Sri Lanka Telecom would have said the duration. We want the guarantee validity should be up to some period. When the guarantee was issued to Sri Lanka Telecom has taken about 3 to 6 months to select, because they have been sitting on the guarantee, and they have taken about 4 months They have taken about 4 months.
Exam, the subject is the financial institutional management. Is there any availability of that subject? Financial institutional management.
The Sri Lanka Telecom.
If there is any availability of past papers?
Right. Sri Lanka Telecom, they are taking up.
Now I saw that site and you are putting all the details.
No, there are some, there are some disturbance. Please avoid these disturbances because the others can't hear.
Hello.
Somebody's on a call, I think. Somebody's on a call, so please.
Excuse me, sir. There are 2 persons. They have switch on their mic. That's a big issue that we have, sir.
So sorry.
There are 2 persons. They have switch on their mics.
That's right. Yes. So please switch off the mic. Please switch off your mic because you all also must remember there are about 243 students. 243 students following this lesson. 243 students following this lesson, and at the same time this is recorded, and these students are going to revisit this site, and in addition to that, IBSL people are also they are also monitoring this. So please switch off your mobile, and if you are on a call, if there's any call, please go out of the classroom and answer the calls, because you have to think of the others also, because they are also sacrificing, and everything is recorded. So I need your kind cooperation. You are unlike a classroom because you are speaking from your residence. So please switch off your mic. If you want to ask any question, you can on it. Switch off your mic, and if you want to ask, you can on the mic. And please avoid any unnecessary disturbances. In the interest of all your colleagues, please avoid any unnecessary disturbances, because I am appealing to you all, because there are a lot of people. I think there are about 243 students following this particular session. Thank you. So once the tender bond is given to Sri Lanka Telecom, let us assume Sri Lanka Telecom has taken about 4 or 5 months. So they have got about 5 or 6 applications from reputed people who are involved in IT, and they have selected IBM, your customer. They have selected IBM. Sri Lanka Telecom decides to select IBM, and they write to IBM and tell IBM, we are pleased to inform that in consideration of your request, in your consideration of your bid, we have selected you to undertake this contract. Then when they intimate this to IBM, IBM finds that they are not in a position to undertake this contract. Why? Because we applied to Sri Lanka Telecom 4 months back. They have been sitting on it, and now they are informing us. We are in the meantime, we have gone and undertaken so many other contracts. So our resources have to utilize to complete those contracts which we have accepted. So therefore, we are not in a position. And IBM writes to Sri Lanka Telecom and says, thank you very much for selecting us, but however, we regret we are not in a position to accept your contract because you are taking a long time. So therefore, we are not in a position to undertake your contract. So if IBM writes to Sri Lanka Telecom, then what happens? Sri Lanka Telecom will in turn write to the bank and demand the payment of 10 million. Why? They'll say, we gave this contract to IBM and now they are not willing to accept the contract. So therefore, we hereby demand the payment from you. So that is a concept of a bid bond. Tender bond, bid bond is a guarantee. The prospective tenderer is required to furnish at the time of submitting an application for a bid. This is obtained to ensure the payment of the guaranteed amount in the event of the tenderer withdraws from the offer, and to cover any non-acceptance. So if IBM has refused to accept the contract, the Sri Lanka Telecom, they could demand the payment from the bank. On the contrary, if IBM has accepted the tender, then the guarantee becomes cancelled automatically. That's why when the moment the contract is accepted by IBM, the guarantee becomes cancelled, automatically becomes cancelled. That's what we have said. Is it clear to you all? Before I move to the next topic, is it clear to you all, the concept of bid bond? Is it clear? You understood? Tender bid bond is a guarantee a prospective tenderer is required to furnish at the time of submitting an application for a bid. This is obtained to ensure, I have explained to you all. So the moment the contractor accepts the contract, it becomes invalid. Guarantee becomes cancelled. In case if he refuses to accept, if he writes to Sri Lanka Telecom and says, we are not in a position to accept it, then they can demand. So let us assume, in this case, let us assume Sri Lanka Telecom, the IBM has accepted the tender. They have accepted. So then when they are accepted, when Sri Lanka Telecom writes to IBM and says, we are pleased to inform that we have selected you for this contract, then this contract, the guarantee becomes cancelled automatically. The guarantee becomes cancelled automatically. So now let us assume that IBM has accepted the contract, 10 days, this bid bond becomes cancelled. Then comes the next subject. What is the next subject? Bid bond, tender bond. A bid bond, also known as tender bond guarantee, compensates the damages if the exporter contractor reverses the tender, refuses to sign the contract after the tender has been accepted. The bid bond is valid from the time of its submission until its acceptance. Then let us come. We are coming to the next stage. IBM has accepted the tender. IBM has accepted the tender. Sri Lanka Telecom officially writes to IBM, we are pleased to inform we have been selected. Then IBM writes to Sri Lanka Telecom, thanking them, thank you very much. We accept you are for selecting us. We are prepared to undertake this contract. Then comes the next stage. What is the next stage? Performance bond. Sri Lanka Telecom tells IBM, we want this entire computerization program of our HR division to be completed within 6 months. They said by 30th of June 2021, we want this to be completed. Can you complete this before 30th of June 2021? IBM says, yes, we can complete it. We can complete it. Then they say, if you say you can complete it, please get a performance bond. Please get a performance bond. This is what is called performance bond. So IBM, Sri Lanka Telecom will tell IBM, as an example, Sri Lanka Telecom will tell IBM, can you please get a performance bond from your bank for 25 million? They want a performance from a bank for 25 million, confirming that you will complete the process within 30th of June. Then IBM will come back to the bank. They will go back to your bank, and say, now we are pleased to inform we have been accepted, but now Sri Lanka Telecom wants us to complete the process before 30th of June. We can do it. IBM will. That's what I told you. Integrity of the party plays a major role. Integrity of the party plays a major role. So the IBM, then as a banker, you know the competency of the IBM, the ability of the IBM to complete this process before 30th of June. So then you will give a guarantee which is defined, which is classified, defined, known as performance bond. That's what is called. You want, Sri Lanka Telecom wants IBM to perform before 30th of June. So then you are issuing a guarantee to IBM, to Sri Lanka Telecom, confirming in consideration of your granting this contract to IBM, we hereby confirm that IBM will complete the process before 30th of June 2021. And if they fail to complete the contract with the computerization process of the HR division before 30th of June, we will pay you 25 million. That is what is called performance bond. Performance bonds are generally issued in the construction field and are normally related to various types of contract supply. The guarantee ensures the contractor performs and executes the contract within the stipulated time frame. It compensates the loss in the event of the non-performance or the obligation of the contractor. It will be valid from the time of issuance until delivery. So in other words, you know what is a performance bond. Sorry, you know what is a tender bond. You know what is a performance bond. You know the situations, circumstances under which these guarantees are issued. Now, is it clear to you all, these two guarantees? Is it clear to you all what is a bid bond? What is a performance bond? Any questions on that? Any questions? Before I move to the next one? Any questions? Any questions on this? Can I move to the next one? Bid bond, understood. Performance bond, understood. Can I go to the next one? Yes or no?
Yes, sir.
Yes, sir.
Yeah.
Right. So now the next one is advance payment guarantee. Now I am just briefly explaining to you all the concept of guarantees and the different types of guarantees. Advance payment. What is advance payment guarantee? Now you have issued a tender bond on behalf of IBM to Sri Lanka Telecom. Sri Lanka Telecom, after the 10 applications, they have selected IBM. IBM has accepted. On the acceptance of the tender, the contract, tender bond is cancelled. Now they want a performance bond. Why? They wanted IBM to complete the process before 30th of June. So they want the bank to confirm their ability. IBM is, the Sri Lanka Telecom is not in a position. They are not going to check IBM's ability. They want you to, they want the bank to confirm. So you have issued a performance bond for 25 million to IBM. You are confirming they will complete the process before 30th of June. Then IBM has given it. Then IBM goes to Sri Lanka Telecom and the IBM says, can you give us a advance of 50 million? That is what is called advance payment guarantee. They are asking Sri Lanka Telecom, because we have some initial expenditure. So can you give us an advance payment of 50 million? Then Sri Lanka Telecom will say, tell IBM, then okay, we will give you 50 million advance. Can you give us a advance payment guarantee for 50 million? They are asking for an advance. IBM is asking for an advance of 50 million. Now Sri Lanka Telecom is telling, okay, we have no problem in issuing you the check for 50 million as advance. We can give you, no problem. But can you get us an advance payment guarantee for 50 million? Then IBM will come to the bank and ask the bank to issue an advance payment guarantee. What do you mean by advance payment guarantee? So we will issue a guarantee to Sri Lanka Telecom in consideration of your paying an advance of 50 million to IBM. We hereby guarantee that we will pay you the 50 million the moment you demand, in case the customer defaults or he doesn't utilize the money for a specific purpose or whatever it is. But in this guarantee, unlike other guarantees, remember, in this advance payment guarantee, unlike other guarantee, remember, listen to this very carefully. In this guarantee, unlike other guarantee, we put a clause in the guarantee format. Please note to Sri Lanka, this guarantee will become operational only on receipt of your check for 50 million favoring our customer's account with our bank. We are putting that clause. We are telling Sri Lanka Telecom, please note, this guarantee will become operational only on receipt of the 50 million to our customer's account with our bank. We are putting that clause. So in Sri Lanka Telecom, otherwise the reason why we are putting is we can't just issue the guarantee and if Sri Lanka Telecom doesn't release the money. So we are putting a condition there. We are telling Sri Lanka Telecom, this guarantee will become operational only on receipt of you. In other words, Sri Lanka Telecom should have issued a guarantee, should have issued the check favoring our customer. We are putting a condition. The guarantee, they have to say pay beneficiary IBM at this bank. We want the name of the bank to be specified. What is the reason? There are two reasons. There are two important factors which makes us a compulsion to put that clause. Number one is we want to ensure the money is actually, otherwise without releasing the money also they can demand. Without releasing the money also they can demand. So we want the Sri Lanka Telecom to put that clause. Number two is we are putting the condition because so that the customer will ensure that 50 million is deposited to this account in with your bank. Otherwise, what happens? He takes the money and goes and deposits the money to some other bank. He may have 2 or 3 banks. He will go and deposit the money in some other. So we are putting these two conditions to overcome such an eventuality. Then once the check is issued, the guarantee is operational. But prudent beneficiaries, what will they do? They will want a further letter from the bank to confirm the guarantee is not. They will say, according to your guarantee, we have issued a draft for 50 million, check for 50 million, favoring our customer, your customer, to be deposited to be credited to his account at your bank. Please confirm the guarantee is now operational. Then what will happen is, we will check from our records, we will check from our customer, have you got the check? He says, yes, I have. Have you deposited? Yes. Then we issue a guarantee, further letter to Sri Lanka Telecom, confirming the guarantee. We hereby confirm the guarantee is now operational. All of the terms and conditions stipulated in our guarantee will remain unchanged. We just say, we hereby confirm the guarantee is now operational. Is it clear to you all? Is it clear? Is it clear?
Yes, sir.
Right. So now I have explained to you all tender bond, bid bond, circumstance under which these are issued, performance bond and advance payment guarantee, because these three guarantees, normally these three guarantees revolves when you are issuing any guarantee for contractors or whatever the purpose, building contractors, people who undertake various projects and all, these three guarantees are issued. So these are the reasons, circumstances under which we issue this guarantee. Then financial guarantee. What do you mean by financial guarantee? Credit guarantee. Let us assume a grocery shop. The person who is having a grocery shop closer to your location, closer to your residence, the person is having a grocery shop. He wants to buy 100,000 or 1 million. He wants to buy 1 million worth of frozen food from Elephant House. He wants to buy 1 million frozen food from Keels. So he goes to Keels, enters into a contract, and the Keels is telling, okay, we will supply 1 million worth of frozen food to you. We will operate within, but can you give us a guarantee for 1 million? So he comes to your bank for a financial guarantee. That is what is called financial guarantee. A guarantee issued to cover a financial obligation. He may take goods from Elephant House, he may take goods from Keels, he may take goods from rice merchant, from anywhere. So they want a guarantee. So that is what is called financial guarantee. Then guarantees issued to the Director General of Customs. Under what circumstances we issue guarantees to Director General of Customs? Let us assume that I am importing a vehicle. The vehicle has come to the harbour, Now I want to clear the vehicle today itself. I want to clear the vehicle. But I go to Customs, Colombo. Customs are telling me, there will be some delay in completing the customs duty because, there is a mechanism or new tariff. Government has issued the new tariff, which we are still working out. There are certain clarifications we require. So there will be a delay of 2 days or 3 days. But I am telling Sri Lanka Customs, today is auspicious day. I want the guarantee. I want the vehicle to be cleared today. Why? Because today is auspicious day. If I miss today, I may have to wait for another 7 or 10 days because there are no auspicious days. So Customs people are telling, no, we can't tell you the rates because we have got the new tariff. We are seeking clarification. Then I say, then Customs will say, okay. Then I ask, what will be the guarantee amount? They say, no, we can't tell you. It will come to about 1 million or somewhere closer to 1.5 or 2 million may come. Then the customs may ask me, why don't you give a bank guarantee for 2 million till we work out? Till we work out the actual tariff rates, and since you want the vehicle to be cleared today, why don't you get a bank guarantee? Then I go to a bank and say, I want to get my vehicle cleared. These people are telling it will take some time. Can you give us a guarantee for 2 million, favoring the Director General of Customs? So these are the circumstances under which we issued guarantees for Director General of Customs pending computation of the duty. So once a guarantee is issued, I go to Hambantota to clear my vehicle. I have brought my vehicle home. I can slowly work out, go to customs later on and work out the actual charges, pay the charges and get the guarantee released. That is what is called guarantee issued favoring Director General of Customs. Then customs guarantee, I explained to you all. Customs guarantee is issued when an importer requests for a temporary exemption. This will essentially cover the anticipated duty component towards expediting the clearance of goods. Shipping guarantee is an indemnity given by the consignee on which the bank jointly indemnifies the shipping line to take delivery of the consignment without the production of the original bill of lading. Requests for such guarantees are made in instances where the consignment arrives prior to the receipt of the original shipping documents. Then credit guarantee is same as financial guarantee, which I explained to you all. Now conditional guarantee. Now this is very interesting. What is conditional guarantee? Now all the guarantees, listen to this very carefully, all the guarantees which we bankers issue are unconditional guarantees. We are not issuing conditional guarantees. Remember, we are not issuing conditional guarantee. We are not issuing conditional guarantee. All our guarantees are unconditional guarantees. Why? Guarantees, we should pay the guarantee on demand. No question asked. Because our lips are sealed. So if you are going to put conditions, then we won't be able to fulfill any obligation because it will be difficult for both parties. So all our guarantees are unconditional. That's why we are using the word in our guarantee. We will pay you on demand without any contestation. We are using the word contestation because most of the beneficiaries, all the beneficiaries insist on that word. Because after issuing the guarantee, if you are going to contest, that guarantee has no value. So we say all guarantees are unconditional. So therefore we say we will pay you on demand without any contestation. But conditional guarantee, exceptional circumstances, we may issue conditional guarantee which are very rare. In my banking exposure, I have come across situation once we issued a conditional guarantee. When did we issue this conditional guarantee? Under what circumstances we have issued the conditional guarantee? To explain to you all, Sri Lanka cricket. Sri Lanka cricket. I know there are a lot of cricket enthusiasts here. Sri Lanka cricket, we issued a guarantee some years back. We issued a guarantee favoring Sri Lanka on account of Sri Lanka cricket to a foreign organization. I think it was Sony Corporation. Sony Corporation, we issued a guarantee on behalf of Sri Lanka Telecom, Sri Lanka Cricket. So there, we have said that we will pay certain amount of some amount on condition that it was on account of the triangular series. I think triangular series which was played in Singapore. Certain countries participated. Sri Lanka cricket team also participated immediately after the World Cup. So they have specified the beneficiary has they have specified they will pay. No, sorry, that particular bank, I think on account of Sony Corporation, they will pay on condition that these players play these matches. They have mentioned the names of 11 players. They have mentioned the names of 11 players. So on that condition only, we also give a guarantee favoring that particular customer, that particular organization. we confirm that these 11 players will play. These 11 players will play. So when the claim was made, when we made the claim, we had to confirm that these 11 players played. Supposing now in our guaranteed condition, we have said these 11 players will play, and supposing if one player couldn't play due to injury, then the guarantee, the principal wouldn't have honored the claim, because why? It's a conditional guarantee. So then, thankfully all 11 players played. They were not injured. All 11 players played, and we got the confirmation from Sri Lanka Cricket confirming that these 11 players played. And in addition to that, they also would have been monitoring from there, because they were the Sony Corporation. They were the people who got the sponsorship. They are the people who got the sponsorship for the TV sponsorship was obtained from them. So they wanted all these 11 players to be to confirm that these 11 players. They said these 11 players should play, and we fulfill, the Sri Lanka Telecom fulfilled. Thankfully, these 11 players played. If I ask you a question, why did they impose that condition? Why were they interested in these 11 players? Can you all tell me? Why were they interested in the 11 players? Any suggestions? According to thinking, why did Sony Corporation insist these 11 players should play? Because they got the TV coverage. They got the TV coverage. The reason is, if you are a fan of Kumar Sangakkara, supposing if Kumar Sangakkara has not played the match, you will not watch the cricket match. Am I correct? So the coverage drops. And similarly, in addition to Kumar Sangakkara's three or four other prominent players, due to some eventuality, they also didn't play, then the coverage, TV coverage will drop, because some people, they will say, no point watching the match because Kumar Sangakkara is not playing. The other players, some other players, prominent players are not playing, so no point in watching. So the coverage drops. So to avoid that, they wanted full coverage. How did they enforce this condition? They want a confirmation. They said the guarantee will become payable only if these players play. So this is a guarantee where we have imposed a condition in case these guys. Supposing, let us assume, if a particular cricketer who was listed in that this thing was injured, then guarantee they will not honor the claim. But how did they mitigate that risk? Sri Lanka Telecom would have obtained an insurance cover. Now, Sri Lanka Telecom, these cricket matches, they are earning billions of rupees more than the profit earned by some of the banks. So they would have got what you call insurance cover in case if a player was injured, their coverage dropped, they would have got insurance cover. So remember, this is what is known as conditional guarantee. I can give you another good example. Sometime back, after conducting a session at IBSL, one girl gave me a call. One of the students who participated at the session gave me a call and said, "Sir, I want to speak to you. Are you free?" Then I said, "Yes." Then she said, "This is something personal. It's a new thing to me." Then I said, "Yes, you can speak to me." Then she told me, "Sir, I just want to find out. My mother is scheduled to undergo a kidney transplant operation." This girl told me, "My mother is scheduled to undergo a kidney transplant operation, and we have got a donor who has agreed to donate his kidney for 500,000, 5 lakhs. This is what this girl told me. So we have negotiated with him, and he is prepared to donate his kidney for 500,000, 5 lakhs. He has agreed to donate the kidney for 5 lakhs. And she said, this girl told me, we have got the money. There's no problem, sir. We have got the money. But our concern is, now this person wants the money before the operation. Before the transplant operation, he wants the money. So after taking this money, if he refuses, how can we overcome this? She asked me. She said, mother wants to undergo operation, kidney transplant operation. They have found a donor, and after that person wanted the money before the operation, because he also would have thought before the operation he wanted the money. And our concern is, in case after taking the money, if he refuses, how can we overcome that? What are the precautions we can take legally? Then it's a new thing to me. It made me also to think. It made me also to think, and then I asked this girl, now where are you all going to have this operation, this kidney transfer? She said, Asri Surgical. Asri Surgical. Then I told this girl, what you can do is you can, she was attached to one of the leading banks. I said, what you can do is you can tell your bank to issue a conditional guarantee favoring this donor. What is the condition? That we will pay, the bank undertakes to pay 500,000 rupees. The bank undertakes to, this is a new thing to me. It made me to think, the bank undertakes to pay 500,000 rupees to you on confirmation from Asri Surgical Hospital that this kidney has been, this kidney transplant operation, that kidney has been transferred. Transplant operation has taken place. We are not saying whether the patient survives or not. Suppose the patient dies, that is not the case. The Asri Surgical has to confirm this. We hereby confirm that the kidney transplant operation has taken place, and this person has donated. This person has donated. This person has donated his kidney. So that is a confirmation. Then I told this girl, you speak to your bank people, and I think your bank will agree. There's no risk for the bank. You can place that money in a fixed deposit under Lien, because they have the money. Bank is not. Bank has the money. This girl, I told this girl, you transfer the money, put the money in a fixed deposit under Lien. The bank can hold the money and issue the letter. But it's a new thing for the bank also. I don't know whether the bank will agree. And since you are an employee of this bank, you speak to your superior. And I told this girl, you speak to your superior, and in case they refuse, you let me know. I will arrange for this in one of the banks. I told this girl, because there's no risk involved, because the bankers should understand. And I said, since you are working in that bank, I think your bank may agree to help you, because there's no risk for them. But in case if they refuse, you just contact me. I will speak to them, or I will even try to arrange a guarantee from one of the banks, because there's no risk involved. And she immediately thanked me. And I don't know what happened. She never contacted me after that, but I think she may have issued the guarantee. So the donor also, he got a confirmation from a bank. The moment the kidneys transfer operation takes place, Asri Hospital has to confirm whether the patient survives or not. So this is what is called conditional guarantee. In exceptional circumstances, we may issue conditional guarantees depending on the situation. Is it clear to you all? Now, the Sri Lanka cricket is one case. Other one is this kidney transplant operation, which was a new thing to me. Now, this lady, when she spoke to me, she never asked about the bank guarantee or anything. She only wanted my advice how to overcome that. And when I explained to this, she also said, sir, that is a very good thing. I will speak. And I said, if you encounter any difficulty, you come back to me. I will try to help you. What do you think about now? Is it clear to you all? We don't issue. All our guarantees are unconditional guarantees. Exceptional circumstances, we may issue conditional guarantees provided 100% cash is given. Security is available to us. Is it clear to you all? Is it clear? Any questions on this? Any questions? Now, you know what is all our guarantees are unconditional guarantee. Although we are saying Sri Lanka Airlines, we are telling them the guarantee issued, the uniform supplied by our customer will be up to your specific. All those are unconditional. But here in this guarantee, we have made it a condition. This particular guarantee, we said we will pay your, the guarantee becomes payable only on confirmation by the Asri Surgical Hospital that you have donated your kidney. So is it clear to you all? The difference between a conditional guarantee and unconditional. But as bankers, remember you are authorized to issue only unconditional guarantees. Unconditional, not conditional. You are not allowed to issue any conditional guarantees. You may put various purposes in the guarantee. All those are unconditional guarantees. Is it clear? Is it clear to you all? Any questions on this? Yeah. So now I will move to the next slide. Difference between a conditional and unconditional guarantee, I explained to you all. Conditional guarantee and unconditional guarantee, there may be a question on this. What is a conditional guarantee? What is unconditional? You may, even in your banking life, you may come across request for unconditional guarantee. You can issue unconditional. Normally, we don't issue conditional guarantee. All our guarantees are unconditional guarantee. According to your own bank's credit stipulation, you will issue only conditional guarantee. Unconditional guarantee. But in case if you get a request for a conditional guarantee, it's a high risk. Provided 100% cash is there, you may have to get approval and you may consider. Then counter guarantee. What do you mean by counter guarantee? When you say counter guarantee, a counter guarantee issued by a bank, financial institution, or a guarantee issued by another bank, financial institution. Let us assume one of our customer wants to participate in a tender in Japan. In Japan, Japanese telecom, they have called for some applications from some of their customers, some people, to participate in a tender. And one of our customer wants to participate. Then we can, but Japanese telecom will not accept a guarantee from your bank, from Sri Lankan bank. They will accept only a guarantee from a Japanese bank. So how do we overcome that situation? We can issue a guarantee favoring Bank of Tokyo, a bank in Japan, who are our correspondent. We can issue a guarantee. So based on our guarantee, they issue a guarantee to Japanese telecom. That is what is called counter guarantee. In other words, same way, let us assume a telecom, an IT firm in Japan who are involved in IT wanted to participate in the Sri Lanka telecom tender. Now, all our Sri Lankan organizations will insist a guarantee from a local bank. They will not accept a guarantee from a foreign bank. However big the bank may be, it may be a big bank, but they will not accept. They want a guarantee from a local bank. So let us assume an organization in Japan wanted to participate in the Sri Lanka telecom tender. They can also participate. Then a guarantee from a local bank, then they will issue a guarantee from their bank. Let us assume it's Bank of Tokyo. And if Bank of Tokyo has some corresponding arrangement with some banks in Sri Lanka, they will contact their bank. If it is HNB, they will contact HNB, and they will ask HNB to issue a guarantee favoring Sri Lanka telecom. So we are issuing a guarantee. HNB will issue a guarantee. We don't know the color of the customer. We don't know the color of the party. Based on the guarantee issued by our correspondent Japanese in Japan, and based on the guarantee issued by Bank of Tokyo, we are issuing a guarantee. So that is what is called counter guarantee. A guarantee issued by a bank favoring another bank. Now, when I was attached to a particular bank, I could remember when that bank issued a guarantee, that particular beneficiary refused to accept the guarantee from that particular bank. From a particular bank, it was refused. Why? That beneficiary said, no, we don't want a guarantee from this bank. We want a guarantee from a different bank. Then when we asked the reason, they said, no, we have certain banks acceptable to us. We want the guarantee only from these banks. Then what happened? Then we had to issue a guarantee favoring that bank, and based on our guarantee, that bank issued a guarantee to the beneficiary. So that is what is called counter guarantee. When you say counter guarantee, a bank issuing a guarantee in favor of another bank, and that bank, based on our guarantee, issues a guarantee to the beneficiary. That is called, so in other words, the guarantee issued by that bank is a counter guarantee. Now we are issuing guarantee to a participant, to a bank in what do you call, UK or Japan or Singapore, we can issue it. So the guarantee what we issue on behalf of our customer to favoring that bank is defined as, yes, counter guarantee. Then assigned guarantee. Usually a bank guarantee is a direct guarantee between the contract partners in which the bank issues the guarantee direct to the beneficiary. However, in international trade, the guarantees are issued to a foreign party through the correspondent banks, counter guarantee or an assigned guarantee. In certain countries, according to their legislation, they are debarred from accepting a direct guarantee from you don't have to worry about that much. Now, security for bank guarantee. I think I have missed one slide. Syndication. In instances where the sum involved is fairly large, prudent banks will want to share such risk with various other banks. In such an eventuality, they may obtain a counter guarantee from a variety of banks and issue a single guarantee. Now, sometimes you get a guarantee, you have to issue a guarantee favoring a particular organization for 500 million on account of a foreign bank. Sometimes you may have a, face a risk in accepting a counter guarantee from one single bank. So you may ask the principal in that country to issue 2 or 3 counter guarantees from various banks. So you can take all those guarantees and counter guarantee and issue one single guarantee, because then in case of a eventuality, you are in possession of counter guarantee issued by 3-4 banks from Singapore or from that particular country. This arrangement will minimize their risk. But even when we are accepting counter guarantee, we don't just accept counter guarantee. We have to check the credit worthiness of the bank, how their past records, their rating, and all those things are taken into consideration only and issued, and only counter guarantees are accepted. Then security for bank guarantee, I think I explained to you all. Under normal circumstances, the bank decides to issue guarantees against readily marketable security, that is cash security, debentures, etc. However, under exceptional circumstances, various other forms of guarantees are also considered. The most important security in a bank guarantee is the integrity and business reputation of the prospective applicant, in addition to the experience, competence. The banks may issue guarantees in high-risk situation, provided such guarantees are covered by 100% cash security subject to its credit policy. Now, banks are also issuing guarantee in high-risk security. What are the high-risk security? Now, I can give you another good example. We came across at HNB where there was a customer, one of our, actually this person was not a customer, one gentleman based in UK. He has come to Sri Lanka on a holiday. And he has gone to a well-known club in Kolpiti for a get-together. And after a heavy booze, he had fought with some people there. This person was drunk and he has fought with some people. Then immediately the hotel people informed the Kolpiti police. Kolpiti police came rushing to this hotel. This particular gentleman was taken into custody. And he was produced in the courts, and his passport was impounded by the courts. And he has come, person has come on a holiday, for 2 weeks holiday from UK, but his passport has been impounded, and he was not in a position to return to UK because passport has been impounded. Then he made submission through his lawyer to get the passport released. Then the magistrate agreed to release the passport on condition that he submits a bank guarantee for 1 million, confirming that he will make himself present. He will present himself at the next court sittings in January, when the court was due to sit in January. So they have asked this person to confirm, because they were courts were concerned, because if this man goes to UK, he may not come back. So due to release the passport and release Corona, he will not come back. So they said, we will release the passport provided you issue a bank guarantee for 1 million, confirming that you will present yourself. In case, if he doesn't come, the magistrate courts could claim the money from the bank. So what happened, this customer, not a customer, this gentleman has approached a person who is known to, who is a customer of our bank. So both of them one day walked into our bank, and this customer came and told me the situation, and he said, he narrated the episode which I just explained to you all, and he wanted us to issue a bank guarantee favoring the Magistrates Court of Colombo for 1 million. So what are the aspects which we have to confirm? We, HMB, hereby confirm that in consideration of you releasing the passport of this Mr. So-and-so, we will ensure that he will present himself at the courts on 4th of January 2000, whatever the date. And how did we issue that confirmation? Then this customer, the customer who came in support of him to assist him, told us that he has an NRC account and he wanted us to block his NRC account for 1 million. So that is what it's a high risk security. So then we got permission, because normally we don't issue guarantees for such situation, but we got permission from our approving authority, and they gave approval, because considering the situation, and this customer is a high net worth customer because of his integrity. So we blocked his NRC account and issued a guarantee favoring the Colombo Magistrates Court. Passport was released. So we were not bothered to see whether this person came on the 4th of January or not. Why? Because we were 100% cash. It's a high risk security. And nobody approached us. I am sure a customer may have come and gone. So, but to overcome that situation, we issued a guarantee which was covered by 100% cash margin, subject to our credit policy. So the banks may issue guarantees in high risk security. You may come across, but you have to get permission from your superiors, permission from your approving authority. Otherwise, later something goes wrong, they will say, why did you issue a guarantee? Because according to our credit policy does not authorize you to issue guarantees for such situations. So now this particular episode which I narrated is a good example for you to know. Banks also issue guarantee in high risk situation, provided such guarantees are covered by 100% cash security. Any questions on that? Any questions?
Hello?
Yes. Then security. The issuance of a bank guarantee constitutes a major risk on the part of the bank. Under normal circumstances, the bank calls for security. However, the type of security mainly depends on the integrity, standing, and past performance of the applicant customer. The amount involved and the duration of the guarantee, I have explained to you all. Then types of security for bank guarantee: third-party guarantee, counter guarantee by third party. Now, what are the securities normally we take for bank guarantee? Third-party guarantee. If another bank gives a guarantee, counter guarantee, that is also security. Cash margin, cash build-up, marketable shares, surrender value of life policies, assignment over the underlying contracts, mortgage over immobile properties. Security for bank guarantee, was explained to you all. Security, if the bank is fully satisfied of this customer's ability to fulfill the obligation, banks may entertain a request for a guarantee against the security of a simple indemnity from this customer. However, under exceptional circumstances, if the bank has any reservation on the customer's ability to fulfill the contractual obligation which is considered as high risk, situation, banks may consider such requests provided such requests are fully secured by 100% cash margin subject to stipulation of the credit policy. Now important operational aspects of a bank guarantee. Now when you are issuing a guarantee, you have to, as a manager, as a credit officer, as a person involved in credit, remember these are the aspects which have to be adhered to by you. All guarantees should be issued in accordance with the bank's approved format. Any deviation of the format to comply with the specific requirements of the beneficiary should have the approval of the bank's legal division. Now your bank will have certain approved formats. So you have to comply with the approved formats. There shouldn't be any deviation. If there are deviation, because sometimes some of the beneficiaries may insist they want the guarantee according to their format. So sometimes you check and see, their format is not in accordance with the formats approved by your bank. So in case if you get such deviations, you can always refer to your legal department. You can issue it, provided you get the confirmation from your legal department. There are certain beneficiaries will insist they will not accept your format. For instance, Sri Lankan Airlines, they will have their own format. So when a customer makes a request, you check your format and you say, sir, we can't accept the guarantee according to your format because we have certain specification. In Sri Lankan Airlines say, no, we want the guarantee according to our specifications. Then there's a deadlock. So you can refer that to your legal department, bank lawyer, get their approval. Certain reputed beneficiaries will have their own format and expect the guarantee to be issued in such formats. Hence, such instances should have the concurrence of the bank's legal division. Wordings of a guarantee. There are no standard local international regulation to word guarantees. Hence, it could be worded freely at the discretion of the issuing bank depending on individual requirement. However, it should indicate the purpose for which it is issued, expiry and the condition under which a claim could be made. Now see, there are no specified format. You can change the format, but provided you get the approval of your legal division. Guarantee formats. All guarantees should be issued in accordance with the bank's approved formats. Any deviation should have the approval of the bank's legal department. Certain repeated beneficiaries may have their own formats, hence may compel the banks to issue accordingly. Wording of a bank guarantee. There is no standard wording for guarantee, hence it should be worded carefully depending on the situation and requirement. However, it should indicate the main element, that is amount, expiry, purpose. Now, in the guarantee, these are very important. It should indicate the main element, amount, expiry, purpose, claim procedure. Then, this is very important. What are the important aspects in a bank guarantee? The name of the applicant, address, name of the beneficiary, a short description of the underlying transaction requiring the issuance of a guarantee, the maximum amount payable and the currency in which it is payable, terms and conditions for claiming the payment in case of an eventuality, date of expiry, applicable law. All guarantees are subject to the laws of that country, applicable jurisdiction. Format of the guarantee should be approved in accordance with the specification of the beneficiary. Now remember, guarantees are it should be applicable. The applicable law is that country's law. Supposing if we issue a guarantee for a party in Singapore, we can't say this guarantee is subject to Singaporean laws. We can't say that. Sorry. We can't say this guarantee is subject to Sri Lankan laws. Supposing if a guarantee from bank in Singapore issues a guarantee to Sri Lanka, they can't say this guarantee is subject to Singaporean laws. We have to say no, they have to say this guarantee is subject to Sri Lankan laws. I could remember when we were at HNB, there was a request made by a particular airline. This airline got into some arrangement and, they were starting their operations. And they have got, I think, Barclays Bank to issue a guarantee favoring our bank, HNB. And they want us to issue a guarantee favoring Ceylon Petroleum Corporation. favoring Ceylon Petroleum Corporation to issue the guarantee for refueling and all. They had to supply petrol. And but when we went through the guarantee, the Barclays Bank had put a clause there. I think it was Barclays Bank, if I remember correctly. This guarantee is subject to English laws. We had to issue a guarantee favoring Ceylon Petroleum Corporation, and Barclays Bank has said this guarantee is subject to English laws. But we can't issue a guarantee subject to English laws. They have to say guarantee subject to Sri Lankan laws. Then there was a delay in issuing the guarantee because Barclays Bank resisted. They were resisting. They said, no, how can we issue a guarantee favoring Sri Lankan laws because we don't know the Sri Lankan laws. So we said, no, we also can't issue a guarantee because all our guarantee should be subject to Sri Lankan laws. Then Ceylon Petroleum Corporation was pressing us. They said, tomorrow the aircraft is about to land in Katnayaka and we can't supply fuel because we have not got the guarantee. So we said, no, we can't issue the guarantee because Barclays Bank is refusing to adhere to the Sri Lankan laws clause. Then one gentleman from Barclays, I think if I remember correctly, it must be Barclays Bank. He gave a call from London and asked us, what is the difficulty? So I had to explain to him and I told him, no, we can't issue the guarantee because according to our regulation, you had to amend the guarantee to say subject to Sri Lankan laws. Then ultimately they agreed. Then they sent us an amendment and said to amend it to Sri Lankan laws, and then we issued a guarantee. If we are issuing a guarantee, counter guarantee to Barclays Bank to issue a guarantee in UK for a party, we can't say Sri Lankan law. We have to say it's subject to English law. So remember, applicable law is the country at which the guarantee becomes operational. So in Sri Lanka, if you issue a guarantee, we always say this guarantee is subject to Sri Lankan laws. Format of the guarantee should be approved by the applicant and should be in accordance with the space. Always, prudent bankers will always go an extra mile to get the format of the guarantee also approved by the our customer. Then, important aspects of a bank guarantee: name of the applicant, applicable law, jurisdiction, amount of the law, expiry, and the claim. A short description of the transaction, details of the beneficiary. Then important liability clauses of a bank guarantee. Bank guarantee is always irrevocable and unconditional. Remember, all your guarantees are unconditional. Exceptional circumstances, you may consider conditional guarantee, but you have to get approval from your approving authority. Except you may, I am using the word you may, but all our guarantees are unconditional. Now this Sri Lanka cricket is one example. Other one is this girl, because on sympathetic grounds, because there was no risk as far as the bank was concerned. There was no risk. You may consider payable on first demand. Our lips are sealed without any contestation, demur or protest. You can't talk. In other words, I always say in a bank guarantee, your lips are sealed. You can't talk without contestation, demur or protest. Without reference to the principle in case of a claim. We don't have to refer, but as a matter of courtesy, we refer. We are not under obligation to refer to our customer. We are not under obligation. But as a matter of courtesy, we refer. Just because we can't pay without informing our customer, as a matter of courtesy. Notwithstanding any dispute between the party, even there's a dispute. Sri Lankan Airlines said uniform is not up to our specification. Customer said very difficult to satisfy Sri Lankan Airlines. So there's a dispute. Whatever the dispute, we have to pay. Treating any demand made on the bank as final and conclusive. You don't have to send reminders. In one of the banks I was attached to, I came across a situation where a branch manager has been sitting on a bank guarantee for months. And fortunately, the beneficiary also has not, pressurized. Beneficiary has been sending reminders. So when we went to that particular bank on some matter, and when I checked the file, I came across a situation where there were a lot of letters sent. I asked, fortunately, the beneficiary was not a big, not a repeated beneficiary. So I asked the manager, what is you have got guarantee? Yes, boss, I got a claim. Why you have not honored it? I was holding it. I said, how can you hold it? Here there are about 4 or 5 reminders sent by the beneficiary asking for the payment. This man has been sitting on it. Why? Because he didn't understand the concept of the bank. I said, you can't do that. Bank guarantee, I told the manager, refer the format of the guarantee. What have you said? I read it to him. Read it carefully. You have said you will pay on demand without any contestation, no dimmer. Here you have got 4 or 5 reminders, you are still sitting on it. So remember, treating any demand made on the bank as final and conclusive. Then important liability clauses, I have explained to you all. Amending a guarantee and extending up. Once you issue a bank guarantee, you cannot amend the guarantee without reference, without getting the concurrence of your customer. Now we are issued the guarantee, let us assume we are issued the guarantee favoring Sri Lanka Telecom on account of IBM performance bond. And performance bond, IBM has told Sri Lanka Telecom or IBM to confirm before 30th of June, they will complete the contract. So somewhere closer to 30th of, somewhere closer to May, month of May, Sri Lanka Telecom, sorry, IBM has gone and told Sri Lanka Telecom that we are unable to, we feel we are unable to complete, we are unable to complete the contract before 30th of June. But why? Because our shipment got delayed because it's COVID-19 and all, some of the ports are closed. So some of the factories are closed in some of the countries. So we are expecting that there will be a delay in our shipment. So we are asking you to give us a further period of 6 months up to 31st of December 2021. So Sri Lanka, what do you think Sri Lanka Telecom will tell IBM? If IBM tells Sri Lanka Telecom, we want time till 31st of December to complete the process, not 30th of June, we don't think we can complete. What do you think the IBM will do? What do you think Sri Lanka Telecom will do? Will they agree? They will agree because of the situation, COVID-19 and the compelling reasons which have been explained to them, they will agree. But they will agree provided one condition is fulfilled. What is the condition? Can you all tell me? They will agree provided one condition is fulfilled. What do you think? IBM has gone to Sri Lanka Telecom saying 30th of June we can't complete, we want time till 31st of December because of the compelling reasons, COVID-19, factories are closed, ports are closed, limited, restricted movements. So IBM, Sri Lanka Telecom say, we have no problem, we understand, we will give you time till 31st of provided one condition. What is that? Can you all tell me? Think about it. What is the condition? What is the condition? They say, okay, we will agree, provided you agree to, you do this. What is it?
Validity period of the guarantee.
Yes, extend. Very good. Validity period of the guarantee performance bond to be extended. Very good. Sri Lanka Telecom will say validity period of the guarantee to be extended. Then IBM says, okay, that's not a problem. We will extend it, and IBM goes off. They had negotiation discussion with Sri Lanka Telecom. IBM has agreed, and they have gone. But they have not informed the bank. IBM has not informed the bank in writing. They have told Sri Lanka Telecom, okay, no problem, and they have gone. Then let us assume Sri Lanka Telecom writes to the bank. This is a practical situation you may face. Sri Lanka Telecom writes to the bank and tells the bank, your customer IBM, you have issued a performance bond. They say they are unable to complete. They want time till 31st of December. We have agreed. So therefore, we hereby request you to extend the performance bond up to 31st of December 2021. They are sending a letter to you. Will you extend it or not? I am asking you. Will you extend it or not? You are getting a letter from Sri Lanka Telecom. Will you extend it? No. Why you won't extend it?
We should have a request from applicant.
Excellent. Very good. Very good. You won't extend it. Why? Simply Sri Lanka Telecom request you won't extend it. You should have the authority from IBM authorizing you to extend. They have gone and spoken to Sri Lanka Telecom, but they have not informed you in writing. So you will not extend it. You will immediately refer this to IBM and say, we have got a request from Sri Lanka Telecom asking us to extend the guarantee for a further period up to 31st of December. Please confirm. Then IBM will say yes. Extend. So remember, because this is a gray area I have come across, when beneficiaries request, some people without knowing, they go and extend it. You can't extend it. You can't do any deviation amendment to the guarantee without the concurrence of your customer. That's what I took this up to explain to you all. Then amending a guarantee after amendment to guarantee cannot be made at the request of the beneficiary. However, if such a request is approved by the principal, banks could comply with such request. The customer has to authorize. You can't do any changes. Claim procedure. All claims on bank guarantee should be made within the expiry. Remember, if you are issuing a guarantee up to 31st of December, any claim on the guarantee should be made within that expiry period. If a claim is made on the 1st of January, you have to reject it. Should be made within the expiry. Any claim made after the expiry should not be entertained, should be rejected. All claims should be expeditiously settled after ascertaining the validity. In certain Middle East countries, expiry dates are not enforced. Extension of pay. Any claim made by the beneficiary should be expeditiously settled, and there should be no hesitation on the part of the bank in honoring a valid claim. Any claim made by the beneficiary should be expeditiously settled, and there should be no hesitation on the part of the bank in honoring a valid claim. Extension of pay. What do you mean by extension of pay? Now see, Sri Lanka Telecom, I told you all, Sri Lanka, the previous slide, I told Sri Lanka Telecom writes to you and asks you to extend the performance bond. You all quite rightly stated you will not extend without the concurrence of the customer IBM. But prudent beneficiaries, what do? They say, we hereby ask you to extend the guarantee. If you are unable to extend the guarantee, please treat this as our claim and pay it. Then you are trapped. You have to pay it. That is what is called extension of pay. Now, sometimes when they put that wording, you are, whether you like it or not, whether the customer authorizes you or not, you will refer to the customer and get his concurrence. And supposing the customer doesn't, if Sri Lanka Telecom says don't extend it, then you have to pay it. Why? The guarantee claim, they have extension request, they have also said extension of pay. They say, if you are unable to extend this guarantee for a further period as requested by us, please treat this as our claim. That's what is called extension or pay. Is it clear? Should be made within the expiry date. So if there is a request, it should come within the expiry date. And if they are unable to extend, they also put say, please treat this as our claim. Claim procedure, all claims should be made within the expiry date. Any claim made after the expiry should be rejected and not entertained. There shouldn't be any hesitation that I explained to you all. Cancellation of the guarantee. How do we cancel the guarantee? Should be cancelled after expiry. Any premature cancellation should have the concurrence of the beneficiary. Even after expiry, it is preferable to wait for a further period of 1 month for cancellation to avoid it. Beneficiary cannot unilaterally request unless such extension authorized by the applicant. Banker is not under obligation to remind the beneficiary. Now, cancellation of the guarantee should be cancelled after the expiry. After the guarantee expires, you can cancel it. You can wait for a what you call reasonable period and cancel it. Any after the guarantee expired on 31st of December, it has expired. You don't have to worry, you can cancel it, provided you have not got any claim. Any premature cancellation should have the concurrence of the beneficiary. Suppose if you are issued the guarantee up to 31st of December, on the 20th of December you want to cancel it, you can't cancel it. Beneficiary has to confirm to you. Any premature cancellation should have the beneficiary, not the customer, the beneficiary, because this contract is between you and the beneficiary. So any premature cancellation should have the concurrence of the beneficiary. After expiry, you can cancel it. But even after expiry, it is preferable to wait for a further period of 1 month for cancellation to avoid any dispute, because normally what happens is we advise bigger banks always better to wait for at least for a period of 1 month, because we don't know, sometimes somebody, they would have gone and lodged the claim with some other branch, because we don't know. When that's why in a guarantee format, we say all claims should be submitted at our counters number 23 Gold Road, Colombo 3 or whatever it is. You have to put the address. Your claim procedure in a guarantee bond, you have to say all claims, any claims arising under this guarantee should be submitted at our counters number 35 Gold Road, Colombo 3 at this branch. So if you put that clause, supposing the customer has gone and lodged the claim at say Bathramulla branch of that particular bank, you are not liable. You are not liable. Why? In the guarantee format, you have said all claims should be submitted at our counters, and you have given the address number 35 Gold Road, Colombo 3 or whatever. So if he goes and submits the claim at some other branch, you are not liable. You are not liable. Because why? You are very clearly in the guarantee format, you have said all claims should be submitted at our counters before 31st of January, December 2000, before 3 p.m. or whatever it is. You are giving the address. So if the customer goes here, beneficiary goes and due to the beneficiary's messenger, without knowing, he has gone to another branch and handed over the guarantee. That branch people have kept it under their drawer. You are not liable. Why? Because they can't say now they have gone and handed over to Bathramulla branch, because it is their obligation, their responsibility to ensure it is submitted at the counters of this particular branch. The banker is not under obligation to remind them. Now, there is no necessity for you to remind the beneficiary. Now, once you issue the guarantee, that's the end of it. You don't have to remind. Now, I could remember when I took over the responsibility of guarantee at HNB, when I took over, every month there was a girl, she used to come and put letters for me to sign, cycloside letters. They are reminding the beneficiary, this is with reference to the above guarantee, which is due to expire on 31st of January or whatever it is. I asked, why you asking? She said, no, sir, this is a possibility. I said, no, you should not remind. If you remind, reminding the beneficiary to lodge the claim immediately. You are reminding the beneficiary to lodge the claim. We are not under obligation to send any reminders. Don't ever send any reminders. Once you issue the guarantee, your responsibility is over. But the only thing is, till the claim is made, till the guarantee is, until the validity of the guarantee, you have a responsibility. But you don't have to send reminders. Don't ever send reminders to the beneficiary, informing them the guarantee is due to expire on this date. You should never ever send any reminders. Once you issue the guarantee, have the guarantee under your records. Till the guarantee expires, you have obligation, but there is no necessity for you to send any reminders. Then cancellation should be cancelled after expiry. I explained to you all. Expiry, once the guarantee is issued, it will remain in force until the beneficiary release. Only the beneficiary has the power to cancel the guarantee during its validity. No other person has the right to cancel the guarantee. Only the beneficiary. In this instance, Sri Lanka Telecom. Only they have the authority to cancel the guarantee, not the customer, not you. Only they can cancel it. Then release of principal from the obligation. If no claims are received within the expiry, even though the obligation of the bank is fully extinguished, we should be cautious in releasing the principal from the obligation. In certain countries, especially Middle Eastern region, the expiry dates are, Middle Eastern countries, the expiry dates are not enforceable in some countries. Then, now who can stop the bank from honoring its claim? Who can stop? Now you have got a claim from a bank, from a beneficiary. Can anybody stop? Can the managing director of the bank or CEO stop? Can the beneficiary, can the customer stop? No. Who can stop the bank from honoring its claim? Can you tell me? Who can stop?
Court's order.
Court's order. Very good. Only the courts can stop. No one has authority to stop the bank from honoring its claim if a claim is made within the expiry. However, if there is a dispute, only a court injunction could restrain the bank from honoring its claim. Only a court injunction. Most often, attempts by the principal to obtain such an injunction or restraining orders are refused by the courts. Courts also refuse, unless of course there is a dispute. In exceptional circumstances such as fraud, the courts do intervene with an injunction or restraining order. If a bank purposely delays settlement of a claim in anticipation of an injunction being served, it could result in action being filed by the beneficiary for damages. So this is a very important slide. If there is a question, who can stop the bank from honoring a claim? Courts. The answer is simple answer is courts. No one has the authority to stop the bank from honoring its claim. If a claim is made within the expiry, however, if there's a dispute, only a court injunction could restrain the bank from honoring its claim. Most often, attempts by the principal to obtain such an injunction or restraining order are refused by the courts. In exceptional circumstances such as fraud, the courts do intervene. Sometimes there's a dispute. Courts do intervene with an injunction or restraining order. If you purposely delay, now sometimes you come and you want to help a customer, you tell the customer, go and get a court order. Why don't you get an injunction? It is not our responsibility to advise our customer to go and get a court injunction. Because if the beneficiary comes to know that you have advised a customer, he can sue you for damages. Why? You have willfully delayed the settlement of the guarantee and you have advised the customer to go and get the court injunction. It could result in action being filed by the beneficiary for damages. Mala fide claim means prudent bankers will examine the integrity of not only the applicant on whose behalf the guarantee is issued, but also the beneficiary. If this is additional because not taken, there could always be a possibility of a mala fide claim, which the bank will not be in a position to resist in terms of the obligation. In other words, a bank guarantee is a blank check. There are instances of bank guarantee issued being used for other fraudulent transactions and not for the real purposes for which such guarantees are. There are certain cases you don't have to worry much about it because it's a classroom, of course, I can explain. But I am trying to say is guarantees, we have to ensure the guarantee is used for the specific purpose for which it is issued. Now, there are instances, sometimes some of the beneficiaries may use the guarantees for different purposes. Not for the purpose, but even that we can't stop it. So now, any questions on that?
Sir, I have a question.
Yes.
This is when after the expiry of guarantee, sometimes in banks we used to get the original guarantee letter which we issued. On the submission only we will be able to release the security.
Yes.
So on this case, are we supposed to send a letter if, on the guarantee is expired? So submitting the original guarantee bonds for the beneficiary? Not necessarily. So after the expiry, it is not necessary for you to call for the original guarantee because in the guarantee format you have very clearly said this guarantee, the obligation of the bank under this guarantee becomes fully extinguished after the expiry of the date of 31st December. You are putting the date. So there is no necessity for us to call for the original guarantee. We can cancel it. But the only thing is to be on the safe side. If you are from a bigger, from which bank you are, Miss? Commercial.
Commercial bank. You are from a big bank. So you have to be cautious. The reason is because your bank has a wide branch network. Am I correct? You all have about 200 branches, no? I think.
More than 200.
Yes. 200 years. You all have 280 branches. So you have to be cautious. The reason is because there is always you may have there is a risk of you being exposed in the sense. Sometimes there may be a situation. Sometimes the customer may have handed over the guarantee to one of your branches. In the vicinity, you follow. But even if you are put in a guarantee format, all claims under this guarantee should be lodged at our counters. We are specifying the date 35 gold road or whatever it is you have put, you don't have to worry. But since you are from a bigger bank, you have to be extremely cautious. You may have to wait for at least 1 month. It's advisable. It's advisable, but we are not under obligation to be on the safe side, because after cancelling, a situation may emerge from one of your branch. Manager may say, I have got a guarantee, we have accepted the guarantee, and if they have put their rubber stamp and accepted it, that could be implied that could be implied to say that he has undertaken to forward to you. Am I correct?
Yes.
That could be implied in different format, because if this guarantee they have gone and given to some other branch, those people have accepted put the rubber stamp and accepted. A lawyer may come to courts and he may try to convince the court saying, no, they have accepted, they have put the rubber stamp. If it is, then why did they put the rubber stamp? They have put their rubber stamp to confirm that they have undertaken to forward. It could be interpreted in different ways. So that's the reason why we always, to be on the safe side, we advise it is better for us to wait for 1 month. But if the customer still insists, no, I want the money. Now, if the customer says guarantee has expired, so I want the security to be released, then you can go an extra mile. You can give a call to the beneficiary and say the beneficiary guarantee has expired. Can you return the? Don't ask the beneficiary. Can we release the guarantee? Tell the beneficiary to return the original guarantee for our records, without telling. Can we release the guarantee? Ask the beneficiary, return the original guarantee for our records. But original guarantee is not required. So that's why when at HMB also, we always had a stipulation. We used to wait for 1 month to be on the safe side, because like you all, HMB also have about 275 branch network, and there are instances. We have come across instances, they have gone and handed over the guarantee at some of our branches. And these branch people also has accepted, they have put the rubber stamp and accepted it. So it could be interpreted in different ways. To be on the safe side. So if you come across, it's a good question, when you come across such situations, better for you to wait for 1. You can't be sending letters to all these 275 branches, because you are, but only thing is, when you issue the guarantee, very clearly say the all guarantee, any claims arising under this guarantee should be lodged at our counters number 35 dash here. You have to put that clause, because what happens is some other people there, when they go and hand over, they put the rubber stamp and accept it. So it could be interpreted in different. So if a customer, now if there are any cases, it will definitely emerge within 1 month. Am I correct, Miss? It should emerge within 1 month. If the customer insists, no, I want the money, especially the 100% cash, then you can tell the beneficiary, can you return the order? Is there any question?
No, thank you.
Right. So now we have come to the end of any questions from others, if there are any. Now we are going to discuss the past papers. I won't take much time. Now this is the book. I think this is the book. If there are people interested, you can buy it. As I told you all, money doesn't come to me. It goes to Sri Lanka Cancer Society. And you can watch it in the YouTube, the launch. If you want, I can send you the link. Then, now are you ready for the exam? Securities for bank lending. Are you ready for the exam? Yes or no? Are you all ready? All are silent. Are you all ready for the exam? Now, I'm not going to have exam now. The exam, I think most probably it will take place next month. So now, have you all seen the past papers which we have uploaded? Have you all? Did you have an opportunity? Right, very good. So now I am going to show you the handouts. I'm going to briefly. Now you can see the handout. This question paper. Can you all see?
Yes, sir.
Right. So now, if you can't hear anything, just let me know. So now, this is the last paper, last exam paper. You can see, no? You can see my image.
Yes, sir.
Right. You can see the question paper also?
Yes, sir.
Right. So now these question papers are there. I have uploaded 3 question papers. I don't want to burden you with unnecessary these things. So I have uploaded only 3 past papers, which are very, very relevant to you. Now, this is the last paper. That is the previous exam what we had. This will be the format of the paper. Now, question, answer any 4 of the undernoted. Now, these are the type of questions you will get. Now, A, an immovable property valuation. In an immovable property valuation, 3 values are stipulated. Define these 3 values. Can you all tell me? I'm sure you know the answer. In an immovable property valuation, 3 values are stipulated. Define these 3 values.
For sale value, market value, insurance value.
Very good. Excellent. For sale value, market value, insurance value. Those are the 3 values. Then B, immovable property is a strong and solid security. List 3 important follow-up mechanisms to be adhered to ensure the security is intact to face any eventuality. I'm sure you know the answer. Immovable property is a strong and solid security. List 3 important follow-up mechanisms to be adhered to ensure the security is intact to face any eventuality. You know the answer. I don't want to, you all will know the answer. Immovable property, there are number 1 is annual inspection, then if there's a building insurance, then payment of assessment taxes. Then what is your understanding of a fixed mortgage? In the handout, there is a column, you find fixed mortgage. Then bank letters of guarantee is a high risk instrument. List 3 of the important aspects to be adhered to prior to the issuance of such guarantees. That is also there in your handout. There are various ways in which bank creates charge on securities. List 3 such charges. What is the answer for that? E. There are various ways in which bank creates charges. What is the answer for that?
Mortgage, pledge.
Yes, very good. Lien, pledge and mortgage. Lien, pledge and mortgage. Then state the important security documents obtained on marketable shares in addition to the follow-up. State the important security documents obtained on marketable shares in addition to the follow-up. Can you all tell me? In addition to the follow-up of fluctuation of the shares. That is a what is the security? What is the state the important follow-up security document obtained on marketable shares in addition to the follow-up of its fluctuations?
Letter of set off and
no, sorry.
Power of attorney, sir. Power of attorney.
Power of attorney. Irrevocable power of attorney. Shares, irrevocable power of attorney. State the important security document obtained on marketable shares in addition to the follow-up. It's a what do you call irrevocable power of attorney. Then write short notes explaining your understanding on any 2 of the undernoted. Now, when you are reading the question, be careful. Although we have given 6 questions, you have to answer only 4 questions. Now, last time some people have answered the whole entire thing because they don't read the instruction very carefully. So then I have to read all 6 and select the best 4. So sometimes you may run short of time. So what is the right short note explaining the understanding on any 2 of the undernoted? Criteria towards ascertaining the suitability of security. It is there in your handout. Concurrent mortgage, it is there. The importance of assigning the insurance policy covering the asset offered as security. Conditional bank guarantee. I explained to you all. Conditional bank guarantee. Then Now this one, part 3, 8 marks you are getting. Question number 1, that is about the microfinance. Now for this one, if you read my article, the answer is there. That article I have uploaded in the system. The article is there. So Mr. Sumit, same name I have mentioned there. I don't have to explain to you. So you may get a question on similar terms. You may get a question. Now, say, take for instance, you may get a different type of question. Sometimes, in case if there's a question saying that so and so is a chef who was a chef at a hotel, he has lost his job due to the lockdown. Now he has started his on his own small way. He has started a catering business. He was a chef in a hotel, started a catering business. So he has been supplying, delivering some of the items to some of the people in the area. Now he had a flourishing business. As an example, I am telling, flourishing business. So he thought of expanding his business operation because his prospect of getting back to his job is very, very bleak due to the COVID. So the only thing is he wants to buy certain kitchen equipments. He wants to have a modern kitchen. He had to buy all the latest equipments he has to buy because he has to work in a 4-star hotel. So he doesn't have money. So he comes to the bank and he asks the bank for a loan of 1 million. He wants to have a nice pantry. Then he wants to buy some of the kitchen equipments, all the latest gadgets for which he is seeking from your bank. So you will have to do a marketing this thing. But in this case, unlike this Sumit's case, you can't grant him a pledge loan. Why? Because he wants to buy certain kitchen equipments, latest kitchen equipments he wants to buy. So in that case, you can take a mortgage over, not a pledge loan, you can take a mortgage over his kitchen equipments like modern gas cooker, 5-burner or 6-burner gas cooker and various kitchen equipment which he has given, because since he has been a chef, he has given you a list of items, essential item which he wants to purchase, because he says I can I can deliver this. I can start a delivery, and in addition to that, he wants to buy a 3-wheeler also. He says, I want to buy a 3-wheeler also for delivery. So this is one example. So in this case, such a situation, you can't give him a pledge loan. You can take a mortgage over such equipment and the 3-wheeler what he's going to purchase. As an example I am giving. So you may get a question similar to that. That is the first one. The first one, the answer is in my handout, in my paper article. Then this one, JF, the partnership council engaged in business of grocery and other exchange. The recent lockdown didn't have much impact on their business, and they made use of the opportunity to deliver essential items to the doorstep of their customers. They successfully competed with the leading supermarkets due to their ability to execute orders expeditiously. This enhanced their reputation, and they have associated their customers when they were in address. They are now desirous of expanding their business operation due to the heavy client base and have been approved. Now see, while I was talking to you all, I was anxiously going through my mobile to see our house arrest has been extended for a further period of 1 week. So we are all under house arrest. So I was going through whether we have been released. So according to the latest message, it says our house arrest has been extended by a further period of 1 week. So we had to suffer for another 1 week. So that's why I was looking at this thing. So now here, the recent lockdown didn't have much impact on their business, and they made use of the opportunity to deliver essential items to the doorstep of their customers. They successfully competed with the leading supermarket due to their ability to execute orders expeditiously. Their enhanced reputation, and they have assisted this has enhanced their reputation. This has assisted their customers when they were in distress. They are now desirous of expanding their business operations due to the heavy client base and have been approved the undernoted facility. Loan of 10 million. Securities 10 million over their stocks in trade, consisting of grocery and all other items stored at their shop. Then That is one question. So to answer this question, the answer is simple. In your handout, now here you had to execute a primary mortgage over their stocks in trade. So I explained to you all. Now here this is a partnership concern. Number one is you have to get the partnership agreement and get a confirmation from them to see whether the partnership agreement is still in force. Then you have to issue letter of offer. Then once the letter of offer is, you have to issue a letter of offer. Then in the handout, advances against movable stocks, steps to be taken against movable stocks. In your handout, you will find advances against movable asset, a difficult and high risk security. Then what are the aspects you will have to look into it. All those have been explained in your handout. It is very clearly in your handout, this has been very clearly explained to you all. So you don't have to worry. This handout, very carefully, go through the handout very carefully, because there I have explained to you all for movable asset, what are the precautions you have to take. That is explained to you all. So you adhere to that. Then you have to go for the valuation report. Then you have to go for the insurance. And so I don't think you will have any problem in answering. Then number 3 is TK Garments. Is here this is engaged in the manufacture of garments for export, and is one of the leading exporters. The directors comprise. The garments are of high quality, hence they have only a few competitors. However, the recent lockdown had greatly affected their business operation, as all their products were manufactured exclusively for export market. They have now approached your bank for a package of facility to ensure the continuity of their existing business, considering in view of the relaxation of the restriction, as the operations are slowly returning to normalcy. Your bank has approved the underwritten facility, loan of 15 million, standby order of 5 million, security mortgage over their land. Now here, entire facility is to be secured against immovable property. So number 1, you have to get asked for the, it's a limited liability company, you have to ask for the board resolution, then letter of offer is a must. Then security primary, how do you do the mortgage? You have to do a title examination, for which in the handout, steps to be taken when you are taking mobile property, then the valuation report, then you have to get the insurance. Those are explained. So explain in brief the steps you will take in completing the security documentation. The follow-up mechanism towards ensuring security obtained is intact until the settlement of the facility. You should identify the risk and take effective steps according to mitigate all such risks. You are aware on any any deficiency on your part will result in serious consequences in case of an eventuality of default or calamity. Remember the concept, on every advance there is an element of risk. So in other words, this is a very simple, this is the last previous ones. This is now here. I have given 3 questions, and I have asked the candidates to answer only 1 question, but some have answered all 3. So just because they have answered all 3, I can't ignore. So I read all 3 and selected the best. So I don't expect you to do that. So this is a simple, very easy question. Now this is last June. Movable assets are considered as high-risk security. Explain the precaution to be taken as a follow-up in mitigating such risks. You know the answer. Insurance compliance is an important criteria in security. So all assets on which we have an interest should be adequately insured to face any eventual. These 3 important aspects to be considered in ensuring this cover. Yes, you have to check the policy document, full value, assignment of policy, all those things. Whenever securities are taken to mitigate the risk, these 3 important factors, it should be considered toward determining the acceptance and dependability of such security. It is there in the handout. Whenever asset is obtained as security, we create only a charge, and the ownership of the asset remains the owner. These 3 ways by which such charges are answered: the lien, mortgage, lien, pledge. Then Here also same question, RFC garment, partnership, engage manufacturer garment. And it's the same questions over and over you will get, but in a different way. Now, definitely there will be a question on microfinance, definitely there will be a question on immobile property, definitely there will be a question on movable assets. So but don't forget to include or stress the importance of insurance, limited liability company, board dissolution, partnership and sole proprietorship. You have to check the business registration and its existence, and letter of offer you have to issue. Then this also December 1 in immobile property 3 values are stipulated, define the same thing. What is your understanding of floating? How do you same old questions are repeated in different ways. But write short notice explaining your understanding of any two of the above stipulations. Third party mortgage I explained. Then small and medium scale enterprises are considered as high risk. However, he has been approved a facility on effective monitoring system. Same the microfinance. Partnership constantly engaged in business of hardware items. They are well repeated. Same type of questions. So I have any questions on what I have explained now? Any questions? Any questions? Any questions? I have only given 3 past papers because I don't want to burden you with unnecessary this thing. So any questions on what we have learned? If you want to ask anything? You all are there now, or you all are gone for lunch?
Yeah, yes, sir.
Yes. So are there any questions? On I can tell you it will be a very easy paper. You don't have to worry. All the things, subjects, aspects which I have discussed during this last 4 weeks will be incorporated in this question. And I think if you do well, you are assured of 20 marks. So apart from that, whenever you have any clarifications or anything, you can always give me a call. I will assist you. So is there any question before I think we are coming to the end of the session? Is there any other
what
question?
is the duration of this paper, sir?
Duration of the papers will be 6 hours. I think morning 3 hours, evening 3 hours. Because now security has been made a compulsory subject. And I think the pass mark will be 51, if I remember correctly. 51 will be the pass mark, and there will be, so we don't expect you to get only the pass mark, we expect you to pass with merit. So securities will be an important question. Now, earlier, of course, it was 3 hours, but from this year, we have made it a 6-hour paper, morning 3 hours. Now, exam, you may have to come to Colombo. No? You all have to come to people who are in outstation. I think still they are not decided on the date. They are hoping to have the exam. Most probably it will be next year because some of the modules they have to complete by most probably. I think it will be next year, by which time we are hoping the country to return to normalcy. So read the handouts very carefully. Now you have the luxury of revisiting our sites over and over again. So you won't have any problem in answering. So any other questions? Is there any questions?
Out of this 20 marks, how many questions we have to answer on the security part?
Which one is?
Out of this 20 marks for the security.
Yeah, security.
How many questions we have to answer?
Yes, you have to answer. If I take, for example, this first one is, here you have to answer the first paper. I just take it as an example because the question will be set. Now here, part 1, I have given A, B, C, D, E, F. That means 6 questions are there. You are expected to answer only 4. Any 4. Am I correct? Any 4. Then part 2, question, 4 marks are given. Write short notes explaining your understanding on any 2. So out of 4, you are expected to answer only 2. You are expected to answer only 2. Then part 3, here select and answer any 1. Now here 1, 2, 3 questions, you are required to answer only one question. So this time it may different, it may vary, but you have to read the instructions very carefully. Now see, the microfinance, I told follow-up is necessary, importance, pledge loan. But here, as an example, what I gave you, the chef. Now in that case, if that man wants to buy some kitchen equipments, you can't take a pledge loan. Why? Because he is offering a mortgage over the kitchen equipment because he wants to have a modernized kitchen. So he is seeking facility from the bank for a facility of 5 lakhs or 1 million to purchase certain kitchen equipment so that he can execute the orders. Something like that. So in that case, you may have to execute a mortgage over the kitchen equipments, and he also seeking the assistance of the bank to buy a 3-wheeler. So you can take a mortgage over the 3-wheeler. So here there is no pledge. I'm just giving as example. I'm not saying you will get a question like that. You may get a question similar to that. So, is it clear, Miss?
Yes, sir. Yes, yeah. Thank you.
Any other questions? How was the overall session? You all have followed all 4 classes. How was the session? Was it interesting? How was the session? You all?
Interesting, sir.
Yeah. So nice to hear you all. Nice to hear the session has been very interesting, and as a lecturer, I must tell you all, it's a new experience to us, but I really enjoyed. And although it's a new experience, today also I'm speaking to you all from the residence. I really enjoyed, although we missed the students. This particular batch has been very, very active. I know you all very talented people. You all ask a lot of questions. I'm extremely happy when people ask questions. I must thank you all for making this session a very interesting session. And going forward, my aim is to ensure each and every one of you gets through this exam so that we can see you all at the award ceremony. So before I wind up once again, I'm telling you all, if there are any questions, any clarifications which you may require, you're always welcome. You can give me calls. You can send me WhatsApp or anything. I will explain to you all. If I am busy, I may not answer, but I will return the call. So I don't think you will require any clarification because everything is there in the system. My presentation is there. My handouts are there. These questions are there. So read this very carefully. Refresh your memory, mind. I don't think you will encounter any problem in answering. Is there anything else? Can we wind up? Any other thing? So buy that book. It will be very useful for you. And when you have the time, visit the YouTube, my book launch. You can see that also. Exam, most probably, I think they will have the exam. Most probably, it will be in January. They are not fixed a date still. It will be somewhere in January. So can we wind up? If there are no other questions, I will wind up the session. Thank you very much again to each and every one of you all. There are 243 students. Thank you very much. Stay blessed. God bless you all. Thank you very much.